All right, check mic, check mic. Check, 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 check. What's up, guys? How you guys doing? Good morning. Just let me wait. What's going on here? Oh my gosh. All right. We may have sound. I'm trying to check to see if we have sound. What's up, guys? Good morning. Sorry I was a little late. Man, I got so much BS I'm trying to figure out in my life right now. And it's like, it's not even, I feel like it's not even me. I try to solve the issues and then, I don't know. I can't explain it. I wish I could. I wish I could just dive deep in it and get your guys' opinions. But I don't have anybody on here to get an opinion. But anyway, if we have trouble with the mic, just let me know. I can't. All right, we're good. We're good. We're good. I get a lot of stuff running on my other computer too. All right. So first things first. Qs were trying to break out to highs this morning. All right. They are still trying to break out through yesterday's high. Yesterday, I was going to make a watch list. I got tied up. I ran to the pet store, and again, it's just, these things just keep happening. But anyway, watch yesterday's high. We break through yesterday's high. Now, this orange line at 408.72, if we can close above that, that's going to give us a new high. All right, all-time highs right here, 408.71. 408.71 on the Qs, 408.71. So keep an eye on yesterday's high. I would love an opportunity to get another test of like 406.50 if we could. 406.50 would be really nice if we could get another test of that to go even more so, to go long. You can see there's liquidity grab here. It just hangs out. So anybody buying this after hours, it's, now it's off to the races. So we struggled pre-market. Keep an eye on rates. Let's see where they are, because you need to know where they are in accordance to where the markets are. And you're like, why isn't this breaking out to all-time highs? Blah, blah, blah. Well, it's probably because the dollar or yields are in a position of a bounce, and that's going to put pressure on technology in particular, just to keep it short and sweet. Give me a daily chart. One of the stocks I am going to be watching today is AMD. There's a nice bull flag. Yeah, so you can see here, right? I don't know how I did. I thought I had this area marked 4.4. That's weird. Let's see if we get a bounce here. See if we get a bounce there on the 2-year. All right, that's going to make, we only have such a few minutes, but keep an eye on these. So the 10 years cracked that level. All right. Everybody's talking about not selling at the end of the year because of taxes and this and that. Man, I swear. Everybody comes, like, you hear one thing and then just everybody runs with it. All right, so you can see the 30-year treasury right here, right? It is trying to bounce, or it's just trying to hold up at this prior resistance level. I know it's hard to see, but it's at 4.3. Chances are it'll probably break, but keep an eye, because even if it just bounces back to, even like 4.2, it just has a bounce back, then you could probably expect the dollar. Look at the dollar, right? This could be an area where the dollar bounces. Look, and there's divergence. We did it. We fucking did it. Anybody on here who doesn't understand like bullish and bearish divergence, we have it again, baby. We have it again. So this is a pretty bullish setup. I'm not going to get into it too much right now. Let's see if we see a reversal on the dollar. That's all I'm going to say. 2, last night I wanted to work on this new channel for the watch for like the nightly watch list, but I just, man, I wish I could fucking get into it, but it's all good. So AMD, let's do it. We got just a few minutes. I gotta set up my level 2. I got fucking coffee all over me. All right, so AMD, if you notice, is putting in a daily bull flag. And while I'm getting this, solar stocks as well, guys. Solar stocks are getting a bit of some news. So you can see here this bull flag. Now look at it on the daily chart. Looks the same, right? Looks the same. That's a beautiful bull flag. If we can break out of this and hold like this 139, 140. If we can break out and hold, we have a gap fill here. These two orange lines. You're going to see these orange lines. They're for a gap or like an all-time high. That's how I can remind myself of an all-time high or like something important, right? And that's where we're headed. So if the Qs can break through and start making highs, it's going to be hard because I feel like if the dollar is going to bounce and yields are going to bounce, it's going to put pressure on AMD. It's going to put pressure on Sunrun. Sunrun got an upgrade. Sunrun got an upgrade this morning. Or it didn't give us the price of the upgrade. It was just Piper Sandler came out and was overweight because of rates. Well, I don't know. It's just funny to me. As a professional, you should, it's like common sense and, so look, here's Sunrun holding yesterday's high. I'm going to look for Sunrun to get into this gap. If I didn't, I'm going to go right back to it. Recent AMD. So this is where we're headed to highs, guys. So if I go long on AMD, where am I going to be taking profits? Well, I'm going to take profits through pre-market highs if we can get a nice bounce. I want to get up to, what is that, like Thursday or Friday? Yeah, Thursday's high, and look to get into this gap on AMD, and that gap's going to be like 143 to 144.50. 143 to 144.50. Call it 145 to make it simple as a final take profit. Okay? Final take profit will be up there. So if I do this, as you can see, 140 is this, like, it's like 139, 150 is that prior resistance from the sell-off back in 2022. Early 2022, like January, February. So we have a gap fill here. All right, that gap fill again takes us to 144.50 area, but again, you have nothing stop. Once we break 140, you can just be off to the races, and we could see 152.50, 152.50 long term. I know it's kind of crazy, but I mean, if we start bouncing here, just watch out. All right, real quick, Sunrun, it's 128. I got 2 minutes. So run, same thing. There's prior daily support level, $20 to $22, 20 to 22 is my target. Right now we're trading at 19.14, low $19. So $20, we're above the 200-day moving average. I don't know if we get a pullback. We already got the pullback, and again, we're holding Friday's pivot high. We're holding Friday's pivot high. So if we continue to hold there, if we can pull back and hold yesterday's high, that would be another area, all right, that I would look to get long. But with this, I'm taking it as it is, and right now it's holding Friday's high. So if Friday's high does not break and we just sit here and continue and we start off the bell coming in with some volume to break through this, as you can see, it's doing it now. Again, $20, $20.50. $20 and $20.50 are going to be the targets. You could have room all the way up to 22. All right. Good luck today. I got to get my stuff ready. Give me 1 minute. I'll call it out as I see it. Or if I get into something, I will let you guys know. Come on, charts, flexible grid, AMD. Come on. And I do this to myself every time, guys. These charts should already be Look, right into the support area on AMD, man. Fuck. I'm too slow. I am too fucking slow, guys. Damn it. I said it. I said it. You're going to come out of the bell with screaming volume. You're going to come out with some volume. God damn it. Just like Amazon yesterday. I do this to myself every day. Too busy worried about... Come on, you stupid fuck. Give me the arrow. Alright. I'm also watching Tesla too, guys. I'm also watching Tesla. Every day I do this to myself. Man, I'm gonna get so pissed. Well, there you go. AMD's going, guys. AMD's going. If you can get a pullback, it's gonna fucking go, you fucking piece of shit. I give up. I fucking give up, man. I hope somebody gained something out of the analysis this morning, because too fucking worried about giving out my ideas than fucking getting it myself. So what do we say on AMD? Take profits at yesterday's high, or what is that? Friday's high, right? Friday's high, or what was it? Thursday. Today's Tuesday, right? So we come in yesterday with this level right here, 140, 139.88. Let's see if we can get a pullback in here. So this screen is supposed to be consistent. Every time I go to this page, it should be sitting there like the same. Like it should fit it, right? It should fit it because I set it up last week and everything should be saved. So now this afternoon I'm going to have to go back and redo these. I want 140. I fucking want 140. Yo, this stuff. I swear, like, if you're not made for some of this stuff, it's just, I get irritated because I sat here and worried too much about giving out an analysis instead of just getting in my position and not being ready. So much for me for trying to do the right thing here. But pretty spot on analysis on AMD. I mean, it's not going to give me a fucking pullback. You got to be shitting me, man. I mean, hopefully somebody gains something from this because this was the top idea of the day. Top idea of the day. Unbelievable. 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 Fucking sitting here talking to my ex about how I'm just trying to get this whole thing, like, it's not getting fixed, so, like, move the fuck on. And I spent time talking with her this morning, or trying to just say, like, listen, you need to come get your shit. Or, you know, so I spent time doing that, and then I come on here giving the analysis, and then here, you know, it's listen, I'm getting frustrated. It's frustrating because, you know, I feel like we're fucking spot on every morning. We are where we should be, and just to me, I feel like a lot of this comes down to. No, I'm just gonna stop because I just am. Well, little gold mine here. Building a little gold mine here. I knew the son of a bitch was gonna fucking take off right off the bell. Just like Amazon yesterday. So that's 2. Right off of the fucking bell. You gotta be kidding me, man. Let me go check in on Tesla and a few other names. God, this fucking hurts. See if it gives us a pullback to VWAP, but I doubt it will. I doubt it. She's just gone. She is gone. See, it's already wicking new highs. Like, she's gone. So, look. See what I mean? I didn't even type in the... Maybe we can look at Tesla if it's able to give us a nice pullback here to 153.90. God, AMD was so fucking clean, man. It was such a clean setup. Such a clean setup. I feel like I do this shit to myself. I really do. I do it to myself. Let's cap and go. Fucking top idea, man. Feels like to me that Tesla is struggling. Feels like Tesla is struggling, like, seriously. It feels like Tesla's struggling here. Maybe it can pull back and hold 253 on the open and put in like a double bottom, but the trade of the day was AMD, you know. Trade of the day was AMD. Unbelievable, and that's back to back. I get hit with that back to back. Amazon, Tesla again today. Like, unbelievable. Like, I thought yesterday was like, okay, I could deal with it yesterday, but now twice in a row? Twice in a row. Twice in a row not being ready. Look at that. You gotta be fucking kidding me, bro. This is where the anger come in if you can't handle it. You know what I mean? This is the type of stuff that people kill themselves over. Shit can get real quick. Unbelievable. Unfucking believable. Fucking talk to this hoe bag for a fucking hour. Come in, not prepared. Well, I was prepared. I knew what I was watching, and I just come on at 9:15 and wasn't fucking ready. Unreal. Their sun run, right off that level, dropped right into that pre-market $19. What did we say? 20, 2050, 22. You know, now, like, look, am I left with, is this what I want to do? Do I want to go after a little fucking measly apple that's just holding support that isn't moving? God, that's so, like, man, this shit fucking hurts, man. I'm telling you. This is the stressful part. It's like this self-inflicting damage of not being ready. Putting yourself in the right position, not setting everything up. And it's like I kick myself in the ass for trying to give out the watch list. Well, really, I'm just kicking myself in the ass because I spent an hour with somebody that's a fucking piece of shit, and therefore I'm late doing this stuff, but it's my fault for not being ready, I guess. Not I guess, I know. I should have just went on with my day, but anyway, there it is, right into the gap. Fucking AMD. I don't even want to look at these options. If anybody let's see here. I think we were looking at what, the 240, the 142s. It was the 142s. Come on. So this is today. Right? So off the bell you could have got about $1.50, $1.50 to $1.75, and they went to $3.25. $3.25. It's 100%. That's 100%. 100% goes right into the gap fill. It's a nice rejection there on volume. All right, so let's go look at the SPY. That's the trade, right? That's the trade right there, though. Man, this sucks. This sucks. So what is that? So that's 141.50. 141.50. Dude. 141.50. 41.64. Then it's gonna bounce. This is so weird. What's going on with him, AMD? I think everybody just got paid right off the bell, and now they're taking it. I would watch out. That's some high volume that came in there. That's insane. All right, so that did 141.66. See if we hold here. All right, see if we hold here. You have the 15-minute trade line. I'm going to take a shot on AMD right here. We're paying up so much for it. I don't like that. I'm looking at... I don't even know what I'm looking at. I have no idea. I think they're going 150. The 144s? No, we can't do that. That's way too full. Yeah. 144s. Yeah, we'll look at the 144s. 144. The thing is you gotta watch, because if this thing continues to pull back, you're gonna get your ass handed to you, and it's not holding. I'm not in it yet. 38.2 it fell. That's what I mean. I feel like that was the trade, guys. I feel like that was the trade, and you had to, like, that was it. You had to be on it right at the bell. I can't get him. I feel like now I would be worried. This is some beautiful volume, and you just had a ton of selling here. Not sure what's going on. If there was news or something going on with this name, but God, that fucking hurts, man. That hurts, guys. It's like, it's insane. It's insane. That was a massive, massive fucking move. And we were on it. That was the top idea. 141, 140.98. I feel like this is way too much volume to the sell side, guys. Something fishy's going on here, I feel like. It's just cutting these levels. Look at it. You see how it's just cutting the levels? You want to take notice of things like this so you can get that idea of, hey, there's something, like, this thing is just went from really strong to really weak. There's something that's fundamentally changed about the trade. Could be a failed breakout is one of the other things that it could be. Let's go to a 15-minute chart here. I don't know where value area high and low is. Okay, so it pulled in right there. That's your 15-minute value area high. Oh my God, now they're gonna send it. All right, what were we looking at? The 144 calls. I don't want to take this fucking thing, man. It's so expensive. I took it. It's probably going to break this level, guys. I didn't take it. I'm not in it. I'm not in it. I am not in it. I'm not in it. 151, 53. 51, 53. End phase. So now we're under VWAP. Now we're under VWAP. $56, $57. I wish I could get this screen right where I want it, but when they make these big moves, it's really hard to do it. So again, your 38.2, it's trying to hold that previous high. I'm not sure what the markets are going to do. I'm going to take a shot on it. Damn it, I feel like this thing's going to break down. I really do. I really do, guys. I think AMD's going to break down. Um, I paid $149 for it. I'm not going to be able to get out of this thing quick enough. I do, guys. I feel like this thing's going to break down. I really do. And that is the 144 calls. Because we filled the gap. If we can get a shot up here to like 142.50, that would be cool. The volume is just dying off at this level. Where's the SPY? Where's the Qs? So the SPY is going to highs. I wonder if it's just a Dow. Come on, let's go. Hurry up. It's going to break down, man. It's going to break down, guys. What did I get filled at again? 49. Again, you got to watch because these, let's see, 36. It's going to be a good, I don't like that delta. I don't know. I don't like that I chose that. There she goes. She's just going to break down on us. Oh my god. What a trap. Alright, I'm gonna have to try and get out of this. I feel like I knew I should not have gotten in this name. So the Qs are trying to hold yesterday's high towards the end of the close yesterday. We're going to need help, but the volume is kind of just giving up on the Qs. See if we can't try to get out of this thing pretty. Alright, just a few dollar loss on that trade. If it goes back up, it is what it is. I can't sit in that trade with that kind of delta. You're just getting hurt. That trade was supposed to be right off the bell, breakout. That was the trade. Me taking the trade here. You stupid piece of shit. You gotta be kidding me. You gotta be kidding me. It's already up to 1 fucking 60. Listen, I'm gonna tell you right now. You want to see this volume start to really bring itself up. Don't fall for it until you start to see this volume really enhance itself. Maybe on a 1 minute. If you look at the 1 minute, let's see, it's 9:59, so the 15-minute candle is getting ready to close. You might get some more volume in here. Volume needs to start picking up, which it probably will. It probably will. I don't understand how you break VWAP, turn it into resistance, and then like, you know, I don't know. I know it's an area. I can see this area right here on the 1 minute. 140.94, but it didn't quite get there. But it is what it is. I had to take some off and manage my risk because that delta was too much. You're losing 39 cents every dollar. So, we're making it. So that trade was meant to be right off the bell, and I wasn't ready. I wasn't ready. I thought Amazon was going to be the last time that happened. Like I kind of shrugged it off. I was like, no big deal. But this one really frustrated me. So you can see how you had a failed breakout there. Now this might be where a long would be. You have some lower volume on this pullback. Let's see if this pullback is able to bring some more buyers in. But I'm not trusting it. I'm done with AMD. I think AMD is going to be pulling itself. Let's look at the daily chart because you have a bull flag on the daily. Stocks on the daily is way oversold too. Wow. So this could be a failed breakout. I guess Bitcoin's running because I'm hearing Mara and so hopefully none of you guys took that long on AMD. Like I said, that trade was meant to be off the bell because we had support here and a pennant. You can see these orange lines here. The orange line was the target. We hit it. We hit it. I said yesterday's high, pivot high, up Friday's high, and then obviously the high. Right? So we start to break out. You get up to this gap fill. That was the target. So it feels like tech is weak. Tech is really weak today. We looked at the yields. Let's go look at them again. See what's going on with the dollar. We said the dollar was probably going to bounce. Not sure what's going on. It could just be... Yesterday, the leaders were the bigger names like Apple, or not necessarily. No, Apple was the laggard. Yeah, the dollar's gonna bounce. Motherfucker. How did I let that fucking trade get away from me? I should have just jumped right in. So I wonder if the Dow is our leader today. Let's go look at the Dow. Everything's pulling back. Alright, so on the SPY, here's a really nice pullback. See if you can hold this level. It's going to be pretty hard to trust what's going on here because I'm not sure if the volume matches up with any of it. Everybody and their mother is talking about not selling. I wonder if we do get some selling. Because it's not like this started. This is not like this started this year. This started the year prior. Right? This started the year prior. I feel like everybody's just hung on to this idea that people aren't going to pay, like, sell because they don't want to pay taxes. Dude, we're at all-time highs. I feel like no matter what, just you can't let taxes stop you from making money. That's ultimately what you're saying. You know, these could be just pullbacks and we could just sit sideways today. My thoughts were today is that we kind of just traded sideways. Because I feel like we have GDP, these unemployment and PCE numbers coming up. Yesterday was a nice move for technology, and I felt like yesterday was the move. But we'll find out. We'll find out here shortly. So much in that level. Um, and look at that. AMD's down to 117, 115. That's crazy. Let's look at AMD real quick. I mean, because you could have a low volume pullback, and this thing would still be good because you're pulling back, and you gotta hold 140. 139.90 would be the area. All right. You can see just that break on an increase in volume, and you're pulling it back. So I'm so sick and tired, man. This is the second time that these mean fucking trades where I could have a huge day just happen right in front of me, and I'm not ready. And I'm not ready. I wasn't ready. Not prepared. Tell you what, you got some balls if you went short up there on AMD on this lower volume. Alright, so here goes Tesla. Tesla's going. Can we get a shot at 258? That volume is poop. Look at this volume on Tesla. It's fucking poop. Alright, that's the volume you want. You want this type of volume. That's 7.3. Like, that, the volume sucks. I'm going to look at an NVIDIA call here, 500. See if we can't fill this gap. Volume isn't not great at all. The volume is not great up here at 495. Alright, on a 15-minute chart. I don't like that, but these tails here, those wicks, being bought up could be, you know, could help that a little bit. It could help why that looks like a lot of volume to the sell side. We'll see how much they are, though. I'm not spending damn near 500 or over $400 for 500 calls. My break-even price is 500, and they're giving me a 50-cent window there, so, which it's at 95.50, so it makes sense. You guys see how that option works out? 490 or 450, 440, 430 for the 500 calls, and they're charging 450. So there's pretty much, I would say, with it being Tuesday, I mean, if there was no time decay, that would be perfect. I mean, you're literally paying the premium of what it should be. That's your break-even price. What is your break-even price? Man, what a messed up. It's just, I don't know how. You know, I hope somebody was able to benefit. I mean, the analysis once again was spot on this morning, to a T, to a fucking T. I gotta find something that's running. So the volume is dropping off on a firm. Just be careful. It got up above this area here. It looks like it's bound. I don't think I have any more levels to go. Let's see. 160. You know, you have a wick here. I would say 53. 53 is this wick right, or this the opening candle here at 53. Oh, come on. Come on, come on. So 53. And then what we'll do is gap fill. You have a gap there. So what we'll do is I'm going to make them both orange because then I'll know that's the gap fill. Alright, that is the gap fill. Remove. Alright. You can't really count a wick as a gap fill. Right, you can't call that a gap fill. Right, so there's a gap there because it closed here, not here. So that's what I would look for, you know, see if you can't get along up to 53. But it feels like the markets, everything that I'm looking at is slow. The SPY is ripping, so I don't know if it's just down names, financials. I'm not sure. Not sure what's going on here. KRE, let's find out. KRE is barely bouncing. Man, I hate these big moves because it makes the charts look like shit. It really does. Let's look at like CRM. CRM is at highs. UNH making lows. Alright, I already looked at Goldman Sachs, right? Yeah, Goldman Sachs. HD. Microsoft. What else? Boeing. JP Morgan. Come on. All right, so Nvidia here. Let's see if it does try to hold. I don't know if it's going to. I think that's resistance. You break above. See if it tries to hold it. Again, I looked at these 500 calls. That's up to you if you guys want to do them, but you know, well, when we looked at them, they were 430, like 435. I'm sorry, 430 to 440 when we looked at them. So now you're paying even more of a premium. All right, and you were getting that at this 440, 430 when we were at 449.50. So you can see even just at 20 cents, 50, 60, 70, 50 cents later, 495, is that 493? I don't know if it was 493.50. I'm pretty sure it was pretty sure it was 494.50. Yes, it was, because it was pretty much break-even price. There was a little bit left on the table there, right, for the break. When I say break-even, I mean if you're paying $4.50 and your target is 500. Well, if this is at 494.50, you need $5.50 to move, and that's pretty much, you know, what you were paying. Actually, there was a dollar. There's actually a dollar difference there. So, from what the premium was, because you needed to get to $499.50 for your break-even price. $498.50 really. And then anything after that would have been 1-to-1. Oh Lord. Man, I can't get over this AMD trade. That really made me hot this morning. Hot. We identified this bull flag here, and right off the fucking bell. Right off the bell, man. Dude, just stay the fuck out of it. Let them handle their shit. This is why... But it's okay for the U.S. to be at war with whoever they want. It's hilarious. Cigna may sell stake in building. I wonder if this would be a good short on Apple here. Right? You have prior support. Let's see. Let me see here. Let's look at this again. People are so fucking stupid. Stop holding a sign and asking someone else to do something. Go do it yourself. It's hilarious. Think about all the fucking people that are homeless. You think they'd stand up for them? Shit's hilarious. Where were y'all at with Syria and Obama? What's funny is, I'm not even gonna get into it. So this 197 level here on Apple, high 196. You can see it kind of rejecting there again. Just feels like, if it gets up there and breaks and holds it, you might have a run up at 197. Alright, so there's where I wanted to see if it was going to hold. Right here at 196.50. And see if she does hold there, because it's coming into this low from Friday's low. And I'm curious to see, you can see how it's getting real volatile, right? Just in that analysis, you can spot these things. You can see that, hey, this is going to be an inflection point. And if you don't see it, if I'm not making it clear. But again, it's going to be like this whole area. It's like this whole area.
by 5, 7, 10%. So when you look over the next few years, even some of the bears now, they're coming out of their caves out of hibernation mode, starting to maybe reevaluate
You can see
some of
why
their
there's a
caves
nice
and
gap
maybe
fill here,
regrouping and looking. And
197.
that's why I think Magnificent 7, I believe it's up 30% over next year. But I think in terms of overall tech, we see
That's the
the
level
S&P
I'm
500
watching for, is
that's
this
up almost
197.
25% because of this transformational AI revolution that's now here.
I'm curious, you say Apple is, which also is you're positive on and believe will have a good year next year. You see it introducing the AI App Store. There are a number of, I think, investors who are like, where is
So this screen, I don't know what's, I think it's because of these moves that we've had,
Is developing a separate
but it's just being really,
AI apps
really,
within the Apple
like,
ecosystem.
really
And from a
weird.
monetization perspective,
Because they've made such big runs and like the screen gets stretched out.
and that's something that gets talked about at WWDC. It's one of our predictions in 2024. And I think this is going to be another part of that re-rating. I think we see
So this is going to be
first $4 trillion
interesting to see what happens. If this is going to be a failed breakout,
being Apple, followed by
a failed breakout, as in this support does not hold down here at 139, 140. If that doesn't hold and you start breaking back down, then I would say, hey, look for 136 to be support. You're gonna bounce off of 136 and then reject at 138 if it's a failed breakout. Because we've been cut, and I said it up there. I was like, wow, that was way too much volume on the sell side. Easy trade though, right? Off the bell, just bang, get long, because it's breaking out of this daily bull flag.
as mortgage rates continue to drop in December? As for the markets, Dow now almost 200, almost back to 4760.
Come on.
Closer to 12 than 13. We're back in a minute.
All right. As you can see here, look at that bull flag on AMD. Look at that. Right? It breaks out, and it feels like it's just fishy. I feel like that was way too far of an extension, and this thing should have only went up to like 101.30, 101.50 at most. It doubled that. It should have went to like 101.50 and then pulled back on low volume, and then you get your breakout. I feel like just that extension was just like, all right, this is our time to like get out. That volume was big. So one more time, I'm going to look for, if this area does not hold at 140, 139, 139, 140 doesn't hold, I'll look for the break of 139 if this is going to be a failed breakout.
That's how Elijah Craig came to be known as the father of bourbon. And it's why we craft our award-winning small batch bourbon for you.
I want to see it, like, if it's going to be a failed breakout, I want to see it. I'm thinking 135, but I feel like 135 is too much. It's too far of a pullback. And then bounce up to like 139. Right? 139-ish. Nope, right there. Yeah, 138. I'm sorry. 138. And then you get the final break. And you can see here, look at that lunchtime volume coming in to the sell side, or 11 o'clock volume. That was such an increase in volume on the buy side, and that was such an easy trade. It doesn't get any easier than that. They went well over like 125% in the morning in less than 20 minutes. So the S&Ps are, continuously breaking out, but right at this moment they're pulling back. All right, so you have a pre-market high up here at 140 or 139.90. So let's see if it starts to hold here. Let's see how we react at this level. Are buyers going to step back in?
Welcome back to Squawk on the Street. Fresh clues today about the health of the housing market. Construction of new homes jumping almost 15% last month to the highest level since May. Our next guest says we're not out of the woods yet, despite mortgage rates dropping, but he is feeling optimistic. Compass co-founder and CEO Robert Refkin joins us here at Post 9. Nice to see you.
Nice to see you as well.
How much activity
I feel like the
has
day is going to start getting
mortgage
quiet
rates
and boring,
6.5%?
unfortunately.
We see over cycles that buyers react more to the change in the mortgage rate than the actual mortgage rate itself, and it suggests that next year will be a very good year. A key question is, will the Fed lower rates in the March meeting before the spring market or the May meeting afterwards?
All right, so it's 11 o'clock, right on
First year in transactions,
time.
93.
Let's see, what are you going to do?
For the first time, all of the
What are you going to do?
and the buyer side are pointing the right direction. We have 4% more inventory ending the year than we did last year, so inventory is building. And again, buyer demand was high even with 8.1% mortgage rates, and now it's 6.5.
What's driving the inventory? People finally feeling like they can sell?
Yeah, look, sellers are adjusting to the new normal, and you can only hold back the life events for so long. We've talked about the 5Ds: diapers, diplomas, diamonds, divorce, and death.
Wait,
And
I
things
wonder,
started moving, and
guys. I think AMD could pull back to 130
Not that much.
for sure.
I mean, it's still at the yes, at the margin, but it feels like that flood of actual sellers and or at least creating a market.
See, it's 130, 150.
Really,
God damn it, I hate this shit. I really do.
yeah, that's a very fair point. We're not seeing a flood of inventory, just a modest amount of inventory. 4% more than last year off depressed levels isn't that great. And although it's 4% more inventory than this time last year, it's 39% less inventory than 2019 before the pandemic years.
This fucking goofball said from DC to Raleigh. Raleigh, North Carolina from DC. Dude, what?
To that, a big factor. One of the best signs we're seeing are
That was the stupidest shit I ever heard. And what's her name was like,
5 months. First time a rental decline.
Why?
Alright, so what I'm going to do is I just grabbed the Red Bull. I'm going to just scan the markets. If you guys have any stocks you guys want to throw out in the chat, I'm just going to scan the markets and try and find something. AMD, I wasn't prepared. Really frustrated in myself. I can't let these stupid mistakes happen because they cost me money. This was a beautiful trade, over 100%. In a matter of before 9:15 in the fucking morning. Like, so you gotta be ready. I gotta be more so worried about what it is that I'm doing than giving out my watch list. So I'm just gonna scan around the markets and look for a few things. Look for a few setups. If you guys have any ideas, if you guys want to throw them in chat, say hi, anything. I don't know. I would love to know what they're yelling at the Nasdaq. You hearing them go, and it's like every time I look, I see like this, something's at like a pivotal area, and you hear them yelling. I want to see. We're gonna start bringing this VWAP down. Look, watch what happens if we start to see. This is tricky. See, we could probably just. I can see us starting to bounce here again at this 490 area. The real trade, I feel like. So it came. Oh my gosh, this fucking mouse. We gapped down. We bounced right into that 90 MA. We grabbed it. Now we're trying to. I just don't like how this thing just didn't fade off. It went down to the level, put in like this double bottom. And I feel like if we can get back, if it bounces off of, here's my plan. Whether if it stays where it's at or it goes down here to 490 on the 15-minute chart, okay? It pulls down here to 490, and then you get another bounce, and it meets that 90 MA, like right around here somewhere, right? On the 15-minute chart. Wherever it's at, it comes down, and it pulls that 90 MA down, and then tries to work its way up. Like, this is the area I'm going to take that short. If we can get it. If we bounce into the 90 MA. Because that next bounce into this should pull it below VWAP and get it below VWAP. But we'll see. It could do it on this candle. We'll see what happens. We'll see what happens. VWAP is 15-minute VWAP and is anchored down. There isn't much. There isn't much out there other than AMD from this morning. What's up, Chris? How you doing today, man? Because I think the reason I'm kind of looking at that for AMD is because I feel like there is some room to go if we can get a pullback. You know, you could get down to this 485. That's a potential target. Or it's trying to put in a cup and handle, right? You have nice increase in volume here. See if we can get a decrease in volume on a pullback and then retest like 475 again. I'm not sure what she's going to do. She just feels like she's not getting any momentum. And she's just sitting up at all-time highs. So... I took a small trade for a loss. So yesterday, remember when I told you I missed Amazon? It did it again today. Not Amazon, but AMD. I was given the watch list. I was arguing with my ex for a half hour. And then I'm like trying to give out my watch list and the bell's getting ready to ring. I pull out my options and everything, and I missed AMD. But it was such a clean, clear trade on AMD. But it did it right off the bell. Right off the bell again. And that one made me upset. I got pissed. Look at that. Right off the bell. And I said it. I'm like, it's my fault that I wasn't ready. Because you can see here at the bottom right. You'll see here on this daily chart. Look at this bull flag. This is a breakout. Now, right now, it's like, we're going to find out right now in this area if this is a breakout, pull back, retest it, grab some more liquidity, and go higher. But look at the increase in volume on the top right 3-minute candle. Look at the increase in selling. But this was over 150%. I'm just like, I just want to go long because we're breaking out of that wedge. We're breaking out of the wedge, and it literally just went. Like, look at that candle from the 1 minute on the 1 minute. You opened up at 138.57, and you went all the way up to 140. 140. but I gave it out. I gave out the analysis, and I couldn't. I was trying to get this up because this screen wasn't up, and this is my options chain, my level 2, my options level 2. So I kind of just let it. I just let it go, and I just got upset and said that's my fault. It's my fault. It's my fault for like worrying about giving out the watch list and arguing with my ex. Not arguing with her, but just pretty much, you know, like just letting it be known that I'm just tired of it. Like, you know, like something's got to be done. Like you got to go. Like there's no. I don't know. I don't want to get all like. I don't want to get too personal, but you know, we just got to make a decision here. You know, it's gonna be one or the other. So, but yeah. So that this one got me today. It got me a little upset that I didn't miss this. Cause look, these two orange lines here. This is your gap fill. These two lines up here. This is your gap for the daily chart, and that was the target. I literally laid it out so perfect. I said, listen. Long off the bell, we're going to take profits through, what was it, Friday's high. We get up to yesterday's high. We take profit at 140, then Friday's high, right here, 141, and then the final and last pieces will be up at the gap fill. We'll be up this prior high at 142 to 143. I mean, like the way I said it perfectly. Perfectly. All right, that's a 3 target area. You could even wait till you get to 141 if you wanted. You didn't have to take any profit because look at the volume. All right, look at that 3-minute volume. Like you could have just sat in this trade and not taken any profit off until like 142. 140-150 area, and then you take it off, like take some off at the gap. Is what it is. It is what it is. You know, is what it is. It's going to happen. Amazon didn't bother me because I was like, all right, it is what it is. I wasn't ready. The analysis was right. It didn't really bother me, but this one bothered me. This one bothered me because I should not have missed this. I should not have missed it. I kind of just let it go was the thing. It's like not that I missed it. Once because I was in the middle of setting this up, getting my delta and everything, and it had screamed on that first candle, and I could have got in like right here above like 140.37, and paid up for it, but I didn't. You know, I kind of like that's what helps me. It's not what helps me, but this is why I can stay profitable, because if I don't get my entry, because I know my entry is where I'm going to make my money. My entry is where I'm going to not lose my money. Like, I can put on big size, and I'm going to be okay. I'm not going to have to worry about a $2,000, $3,000, $4,000, $5,000 drawdown. You know? I'm going to make my money on my entry. And if I get my entries right, I will consistently be profitable. If I go chasing this thing up here, and you just get a massive reversal, now I'm like, oh shit, now I'm down so much. Like I wasn't, now I'm saying to myself, I wasn't patient. Why didn't I let it go? So I just let this thing go. I was just like, it is what it is. And there's nothing I can do about it. But we'll find out. Again, this is a bear flag here on this daily chart. We're going to see if this was a false breakout. So my game plan for this right now goes as this. If we do not bounce off of this level, I'm going to look for a pullback, which I think is coming. I'm going to look for a pullback down to like, so it's going to be like, I feel like we're going to break down to this 136, right? It's either going to bounce off of this level, or we're going to pull back and hit 136, come back up to like 138, and then that's when you're going to get some size come in here, and this thing's done. It's not done, but you're going back down to like, we'll say what's an area for AMD? I can't do it on these small charts, but you know, AMD will probably be back down to 130s. Nice $10 move there if this is a failed breakout. So if we don't bounce here off of 139, all right, I'm either going to look for this to start pulling in some volume. All right, it's going to we're going to start bouncing off of here with some high volume, or it's just going to continue to fall and get down to 136, bounce off of 136, make 138 resistance, and then from there get short if this is a failed breakout, which I think it will be. That's going to be my plan. That's my plan with AMD. So if we get to 138, you could scalp it long, or if we get down to 136. If we break down and hit 136, you could scalp along off of 136 to 138, yesterday's close area, and then look to get short, and take it down, you know, $4 or $5 to, you know, even back down to that 130 area. That's my plan. That's my plan with AMD. Because you can see here, you should start having some liquidity. What it should have done was it should have held 139. When AMD was going today, when we got up to this gap, you'll see here on this 1 minute, this reversal here, it took back the level quick. You can see how it took it back, like it just sold it off of this gap at 142.89, 142.83. Sorry, it sliced right through it. Didn't try to bounce, and look at that volume. Look at that. That's 60 million. That's I guess that's what 69. I don't know how to say that. It's not a million. 690,000 shares. 600,000 shares. There. Turns it into resistance. And then look, you get that increase in volume on the breakdown. I'm like, all right. So then I look at the Qs and the SPY, and I'm like, the SPY's still making new highs. SPY making highs right now. So I didn't know if there was news or something, but I had an instinctive feeling that something changed about AMD. That's more than just a pullback. Or we're getting ready to find out. We're getting ready to find out. So this is why I'm drawing my thesis that this is going to be a failed breakdown, because it rejected way too hard at this gap. There was some serious volume coming in, and it cut through the levels. And it's just the way that AMD acted up at 143.50 kind of told me that it's not meant to be up there at this point in time.
Ahead, the CEO of Charles Schwab. Look at what the retail investor is doing as we head into year-end. What do you expect for 24? We're back in just a moment.
So we'll see. We'll see in the coming weeks if I'm right or if I'm wrong. Because it like, if this thing was going to bounce and then like kind of like pull itself back to that area, I don't know. Unless it just got over its... Unless things just got out of control because there was a lot of people watching AMD. I don't know. I'm not sure. Because I don't know if I would have said, like, you know, like a breakout to like 140, like psychological 140 level, 141, and then pulled back to go long, but we ran, man, that was such a fucking trade that I hate to have missed that, because that was 150% in just a few minutes. And so like right now is a good example. Right now is a good example. Where is that? Why is that liquidity not rushing into this name right here at this area? That's the second part to this. You should have no problems with buyers stepping in right here to buy this. If everyone sees this pattern, and this is actually going to be a long, then you should have buyers rushing in here to take this thing off this level quick. I gotta clean these charts up, man. These I have way too much going on here. Google's kind of just trading sideways. Still, it's just consolidating. It's up at the higher end of the range, so we'll see if this is going to be, we'll see if this is a nice short up here. I'll give it a little bit, do a little more analysis. This is some nice volume on this bottom end breakout. Let's see what happens. Let's see if this is see if we can just sit in this range here and look to trade this range. The thing is you have this 50-day moving average getting ready to come up above, or the 100-day moving average, I'm sorry. Break above this 50-day. That's not what you want to see something go to the upside. So we keep an eye on that. So it looks like it pulled back to yesterday's close, and it's still turning 139 into resistance. 138.67. This is like the weirdest pattern I've ever seen. So weird. I have not seen a it's just a weird, this is such a weird pattern going on here with Google.
At Monifal, we believe that making the perfect pair of jeans is an art. We apply the resin, then we hand scrape it, pin and tie it, wash it, and apply the
UPS, watch out guys. UPS might be a nice long here. Look at the support. this area here that was support that broke, um, right here. So like 160. All right, and then you have room, damn, all the way up to like 170. So up in that area. So I'm gonna keep my eyes on this in the transports. You're seeing some nice volume here on this break above that level and hold. It sat here, put in a double bottom on it. Let's see if we can start to bring UPS up to like 167.50. I'm going to look at the options on. Let's look at them now. We'll just look at them together on the daily chart. I want to 166.50. One sec. 167. I still think this would be the level because you have this here being, so it's like it breaks out or it breaks down, tests it, retest it, and then makes it resistance. And that's when it started. Now it's trying to recover. So I just think this is your support. 160 or 170, 168 area is your support. So let's see if this is going to hold. And I'm going to look to see if I can take this long up into that area. That's UPS. Feels to me like it wants to curl back down. This has got me a little nervous to take this trade. Yeah, you can see it pulling back right now. Let's see if it pulls back a little bit further. I do want to take this trade. I feel like this is a nice, nice daily setup on, nice setup on the daily chart. I think it's a really nice setup. But it is not looking good when you have the 50-day below the 100 and the 100 below the 200. That's completely opposite of what should be going on here. So that's screaming downside. It's just, is this going to be the reversal? That's what we have to ask ourselves. Are we catching a reversal here? Look at that sell volume.
You may have a retirement plan in place, but are you sure it's the right one for you? Creating a plan with Fisher
That's
Investments
crazy.
gives you the confidence that your money can last through retirement. We'll shape your plan to meet your unique goals, needs, and lifestyle, so you can enjoy the retirement you dream of.
Call now for your free Fisher Ready Set
All right.
Retirement. 3 guides to planning, maintaining, and improving your retirement lifestyle.
161.98. This thing is slow, not volatile. I'll give it a little bit, and I'll look back to see what she's doing or not doing. I'm not going to sit here and waste my time looking at it when it's not moving. So I'm going to keep this on the watch list. Tom Lee said last week IWM you could see 50% upside on the IWM. It's a little too much. So what I did was I had taken from the day that he said it and said, okay, well, let's just see where 50% would be. Anybody have any guesses where 50% would be? I mean, it's pretty easy to do the math if it's at 200.
Want to apply to be on CNBC's Disruptor 50 list? Is your start of disrupting the status quo? Scan this code or go to cnbc.com/disruptors to apply at the early.
He said 50% upside. Of course, he didn't give a time, I guess you could say. Well, he didn't give you a time. But he's saying 400 on the IWM. 400. 400. It is lagging. It is lagging, but if you couldn't get to 400 with rates at where they were, or you couldn't get to 300, I mean, guys, I don't know if you guys remember, but in COVID era, we sat here this whole year sideways. This whole year. And it was like the whole market's moving, but the IWM wasn't moving. It just got there. It was like, all right, this is it. This is all I'm doing. So, yeah, I don't know when the IWM would hit 400. I might nearly be dead. But so yeah. We have GDP numbers tomorrow. Then we'll start getting the unemployment data and PCE. Inflation rate year over year 3.1. So that was a little bit higher. Canada's inflation rate. Building permits 1.46, 1.48, 1.47. Near Fed Treasury purchase 2.5, 2.25 to 4.5 years. Fed Bostic. Okay, so Bostic comes on at 12:30. It's tick flows. Foreign bond investment, overall net capital, API crude, balance of trade. So yesterday they didn't do anything, did they? The yen, BOJ interest rate decision, because there were some pretty, like, the economic data that they were watching was declining, so therefore it was somewhat known that they weren't going to raise rates or anything. Oh, I wish I knew how I did this. Oh, I clicked the mouse in the center, I knew that, but alright, so we'll let this go. I'm curious about existing home sales, which is going to be on Thursday or Wednesday, so that'll be tomorrow. We'll have some 20-year bond auction. So yeah, we should get a little more volatility. Yeah, that's all. That's all I have. I was sitting here talking and the mic was on. I'm going to scan through some charts and try to find something. That's all. So Adobe is trying to bounce off of this 50-day. What a little bitch. What a little witch. All right, looks like we're going to see you're coming up into this gap fill. I stopped watching it towards the end of the week last week because they had earnings and the premium was getting a bit high, and I was waiting for them to report. But that's a nice, you just gap down, hit that 50-day, and you've just been going ever since. So if we get a pullback in Adobe, 605, 594, we start pulling back into that area. I may look to take a long if it's a low volume pullback. The volume is decreasing a lot as we're getting higher. So yeah, Nvidia's red. Pretty much the market is green. I'm still watching AMD. AMD is acting kind of funny. I can smell it. I can smell what's going on here. Maybe it's going to start bouncing. Or this is going to come into resistance, and that's going to be a failed breakout, my friends. And what that would mean is you probably have a test coming of 130. Probably have a retest of 130. Or pulling back into the 100-day or the 20-day moving average. Something. So even just a small pullback wouldn't be bad, but this is a pretty clear bull flag there. And in order for this to be a bull flag, this would if it held, it would have to give us another run higher. Hold on. Because you can, it all depends on if it's a wedge or if it's a bull flag or bear flag, and how you want to measure to see your distance on, if it were to break out. Like if you have a bull flag, right? How would you know, to measure the move? Like if I take wedges, I do them different than I do bull flag and bear flags. So where is this? This is at 165, call it, okay? So if we go to 165, where is that? Oh, isn't that funny? Isn't that funny? That's hilarious, isn't it? It's hilarious. 164.35, 164.46. I was 10 cents off. That's what that's telling you and telling us. That's how you measure a move. So if we for some reason are able to get a pullback on this name and we start getting some of that volume, because that's a low volume pullback in and of itself on the daily chart here. That's a low volume pullback. So when these stocks move like they are, your screen looks so trashed because everything is just stretched. Look, isn't that crazy, right? That's a 116.15, 117 to 140. That's going to be a huge move. It's so funny. Let's see what's going on here. Alright, I may try to put something on here. Let's see if we can find something to put on for AMD, maybe for like a week or two out. Let me do something real quick and I'll be back on the mic. I'm doing a little bit of work here on AMD, and I don't know if this is going to be a rejection. That could be a nice rejection there on AMD. It could be a nice rejection. Yeah, I wish like if Chris was here in the morning, man. Like when we gave out this watch list, I'm gonna have to start being like on an exact time because it's not fair to anyone. Um, you know, um, had a family member that was sick, and I was like trying to. I was up at like 2 o'clock and stuff trying to help him, and um, kind of fell asleep and felt comfortable, and I didn't wake up till 7 o'clock. So, um, but this morning's analysis, it's just I wish somebody like because I was just seeing how Chris has like told himself not to trade today. Now that's cool, right? That's all right. I mean, if you told yourself not to trade because you didn't find anything and you didn't see any setups, that's how it should be. But there was a beautiful setup here on AMD. Nice setup on AMD on Amazon yesterday. Um, and I kind of just wish that they would have seen that and been able to capitalize on it, or somebody be able to like see be here in the morning, catch the analysis when we go over this stuff, and capitalize from it. But it's good that you know I don't know. I guess if you don't see anything, that's fine. It's like, are you making sure that you're looking all over the broader markets? You know, take into consideration what the Dow, what the Qs, what the IWM is doing, and then also where are they in relation to one another, and that'll kind of give you like an idea on like what sectors you want to be along, what sectors you may want to lean on if things start to go south, right? Because if something's already down and it's like lagging the market, chances are that'll just get enhanced if the market were to turn around and start heading to the downside. They would probably take the brunt of it. Um, so I don't know what I was. There was something I was going to say. I don't know. I don't know what I was getting at there. Joe Terranova just said this best, guys. Listen to this.
Work out. The New England Patriots at this point. You lost. Now are you going to spend another year in 2024 sitting in those money market funds? That's just
Right there.
poor risk
Right there.
management strategy.
Hold on.
That's poor portfolio management strategy.
Right here.
And it's indicative of someone that's afraid of taking risk in the market. And I
Right
think
there.
that's the biggest thing to
Yep.
understand. If you want the reward, you have to
I wonder what
understand
that
you
noise
have to
is.
take the
Yeah,
risk.
but you can't you understand how it's probably difficult
Growing earnings and growing their business.
I don't know if it's me or if it's CNBC.
to add more?
Can I say why that's not true? All of the data we have, all of the academic literature suggests that there is a positive effect from buying after stocks have gone up. Joe wrote a whole book about it. Buy high, sell higher. This is not the way they built Las Vegas was basically on the premise of the gambler's fallacy. People walk up to a roulette table. It's red. It's red. It's red. It's red. They say, all right, that's 4 in a row. It's got to be black now. That's not how it works. Every spin is independent of the one prior. Stocks have nothing to do with that because gains build on gains. Why does that happen? Because companies that are growing earnings and growing their business have figured something out and they keep doing it. You're talking about human nature. This is why when you see stocks make new highs, that's not a sell signal. Once in a while, it's a sell signal. Most of the time, almost never, is it the reason in and of itself to be out of the market. Markets tend to trend higher. New highs follow previous days of new highs. So I really feel what we need to do, if we have that impulse to say, it went up yesterday, it has to go down today, give the money to someone else to manage. You obviously don't understand market history, you don't understand probability, and you don't understand that this is a game where trends can persist for months or years on end.
Sure, even well, go ahead.
Real quick on why the trends persist. The predominance of market activity today is algorithmically generated. It's non-discretionary funds that are looking at and trying to identify where is there a potential trend in the market, and they are going to ultimately follow that trend. And I think that's important for the viewers to understand, because following. They're not sitting there and saying, oh, well, we think the market might be getting rich from a valuation basis, or we think earnings, the recovery is going to begin to moderate. They're purely looking at the momentum in the market and capturing the trend. And sometimes it works, and right now it's working.
Jenny,
I know where we're going.
tell me what's your view?
Okay, so I think things move asymmetrically. So when Josh is saying Joe's book is sell high and sell higher, yes, that's true for the long term. In the short term, things are asymmetric. And so what I did last week was I sold VF Corp. And why did I sell VF Corp? Because within my portfolio of 35 stocks, which is, yes, fully invested, whether I'm bearish or bullish, I'm always fully invested because that's what my clients are paying me to do. What I did was I sold VF Corp. Why? Because the market gave us a gift last week. And it gave the dividend stocks a gift. I had stocks that were up like 15 and 20% last week. So you all know I bought VF at 19 a couple months ago. Whenever we buy something, there's a two-pronged star investment thesis for the dividend portfolio. One is capital appreciation, one is dividend. Then they went out, they cut their dividend on their earnings call. To your point about everything being so algorithmically traded, right? We saw that stock go from 17 to 13. There were no humans trading that thing down from 17 to 13. It was all algos saying like, okay, you know, they cut the dividend, you have to sell. Because any human would have read that earnings report and said, well, what happened was they cut the dividend and they're using it to build up the brands. It's actually really good for the company. So that is good for the company in the long term. But in the short term, you get a gift like last week where you have tons of positions that are up 15 and 20%, and you think to yourself, hogs get slaughtered.
Well, it's up 27% since November 1st.
Right, which is wild. So you take a little bit off the table, and that's just good risk management. And to your point, Josh, you don't sell something just because it's at a 52-week high. You don't sell something just because it went into positive territory for me like VF Corp did. But you always look at that position and you say, okay, what's my upside potential from here? What are the opportunity costs of continuing to hold a VF Corp versus owning something else? continuing to hold a VF Corp versus owning cash for a short while. This market is pretty manic that we're in, and all I know is that while we're touching a high right now, it's bumpy. And we're going to get other opportunities both broadly at the market level and at the individual stock level. So in this kind of market stock, what I do is I say, wow, where are there gifts out there? Where are things stretched? Where has this really robust market led things too high? And what can I do to mitigate risk?
I know, but I almost feel like Josh just made the case to do the exact opposite.
No.
He made it at the macro portfolio level.
We don't disagree. I was building on what Joe was saying market-wide. Of course there are stocks that went up too much last week. Of course there are stocks that didn't go up enough. That'll always be the case. I'm saying there is a tendency on the part of people who haven't been around for a long time or have a short memory to look at new highs, look at stocks at 52-week highs or all-time highs and conclude, I missed it. That's all I'm saying.
Right.
And that is not how it works.
Can I riff off of that?
There's $6 trillion in money market accounts, and there's $1 trillion this year in assets under management in money market accounts. And so there is a lot of money on the sidelines, and there is opportunity costs, especially as yields are coming down and earnings are going up.
But see, I look at stocks like, just playing off of what Jenny said, Nike's up 16% in the past month alone. Reports earnings on Thursday. I'm wondering if anybody is thinking about, doing what Jenny did, just looking at these incredible gains in a really short period of time and saying, you know what, maybe I should take a little bit off the table here.
Do we want to trim that tree, or do we want to stuff that stocking, Stephanie?
It's only up 4% year to date. It's up 35% from the lows, yes, but it is trading below. It is trading below its long-term average, not by much, but 33 times. The long-term average is 35 times. I think the story with Nike, and I am nervous about it. There's no question about it, just given the run it's had. And oh, by the way, we had 4 upgrades in the last month, and 5 different analysts raising numbers and raising target prices. So the sentiment definitely has swung to the other side. That makes me nervous, but I do like fundamentally the company very much. I think the top line in the quarter is going to be not great. It's going to be flat, right? I think North America down 4, EMEA down 1. China is the wild card. Maybe at best they do 10. So the top line is not the story. That's not why I own it at this very moment in time. Profitability is why I do, and the margin story. And that's as freight costs come down, inventories come down. That should help margins. And so therefore, the earnings numbers should be okay. But I would not be surprised, Scott, to see the stock down a couple of percent on the print, just given the euphoria.
I mean, stock moves can outpace fundamental trends to build the case of why you like something. Joe, Expedia is up 57% since your rebalance on November 1st.
Okay.
57% in 6 weeks.
And I will respond to that by saying no motivation whatsoever to move away from it. You could see 2 things when you look at Expedia. You could see in December of 2022, the low was 82. Or you could see in February of 2022, the high was 217. When momentum begins to build, and by the way, momentum doesn't purely build because a bunch of people sit around and say, okay, let's drive capital into a particular stock. There's a fundamental catalyst that is the initiation of the process in which momentum funds will begin to gravitate towards a stock. And that's exactly what happened with Expedia. We saw the recovery through 2023. The momentum is clearly in place. And when you look at that, you see 217 in the early part of 2022. And when Stephanie talks about being maybe somewhat cautious around where Nike is right now, again, I look at Nike, and I'll tell you this, and we've gotten tripped up in Nike for the better part of 2023. But what do I see with Nike? The potential to go back to 179, and the green light's on with Nike.
It's only a short-term
They've reestablished
concern.
the momentum.
Yeah, it's only a short-term
Guys,
concern.
from a bigger picture,
wait,
I'm sorry.
It's only a short-term concern because the fundamentals are there. Remember a year ago, inventories were up 43%. They're going to be down double digits. That's huge in terms of a tailwind. So that's why I'm sticking with it. But I'm very mindful that the stock has gotten a lot of love as of late, and that's a hard setup. It's just a hard setup short term.
It's also very popular right now to dismiss the potential that China actually has a recovery in 2024.
I've been saying that all year.
2024 doesn't look like 2023. If you say that, everyone steps back and said, oh, China's uninvestable. Nope.
I was going to ask you guys, don't you feel like there are so many Nikes where you had companies where management spent 2022 right-sizing their headcount, worrying about inventory, stopping the buyback activity, and like really girding themselves for the recession of 2023. It didn't arrive. And then the Fed basically told us they're not looking to over-tighten and create one for no reason. And this exhale, so I just flagged this before the show. On Friday, you had $20.8 billion come into the SPY ETF. This is the biggest one-day inflow into the world's largest stock ETF in the history of ETFs. Has never happened before. That mentality is, I think, the end result of this huge chase for performance, but also underlying, there are so many Nikes. Think about how many names you own where they're exhaling and they're ready to get back on offense after 2 years of worrying about the Fed and recession.
But here's
trying to find the ones that are actually, the valuations make a lot of sense. So like something like, right? So like you could say the same thing about Starbucks. But guess what? You could say the same thing about Estee Lauder, and that stock is still down 40% on the year. So there are definitely opportunities, especially with regards to China, but also the overall growth and the fundamentals.
And this is where, thank you so much for calling on me. So this is where it really gets stock pickery, right? Because if we get even more narrow than Estee and Starbucks and we go just into footwear, you've got Deckers that had a great quarter because valuation was mismatched. You've got Skechers that had a great quarter. You had MyVF Corp, where Vans, right, didn't have a great quarter. So even within this, Josh, I don't think you apply the macro. I think you look at the individual companies and those individual brands. And Steph, to your point, you got to match up the story with the valuation. They're all over the place. On Nike, like, I'd be worried going into next week. If it were mine, I would trim it the same way I trimmed VF.
But see, that I was going to ask you about your AMD, Josh, which is up 46% since you bought it on Halloween.
Yeah, I should be trimming it. I just don't own enough of it where I would really be like massively hit by a drawdown. But that is exactly the kind of stock, to Jenny's point, there's no way the fundamentals of AMD just doubled in terms of how good they are. It's not conceivable.
But then how do you make the determination as an investor when not to trim something? You say, well, I should have, but you didn't, and it doesn't sound like you will. And Steph's not trimming Nike ahead of the number, even though she said to our producer, she's scared to death ahead of the number. When do you know when to do it and when not to?
So my answer is, and this will not be popular on this desk, but it's okay. We could all have different philosophies. My answer is always top down and from a portfolio perspective, because I don't buy stocks for a trade. And I don't buy stocks because I think I have an edge on how this quarter's numbers are going to be. When you hear me talk about stocks, almost all of the time, it's because it's a longer-term investment. So my decision of when do you sell is more likely to be something like it's gotten too big in the context of my overall portfolio. I still want to be long. I'm just irresponsibly long right now, and you've seen me do that over the years with names. That's going to be more likely than me saying, oh, I think all the good news for this coming same-store sales number is already priced in. I don't think I have those edges, and I don't buy things for short-term catalysts. So my answer is most likely to be I'm sticking with it, sticking with AMD, because it hasn't outgrown its place in my portfolio, and I want to be here for the next 3 years, 5 years, 10 years.
So I think it's a good segue into what you have as your sort of New Year's resolutions for investors.
Eat less
led
carbs.
off by stop over trading.
Well, yeah, I mean,
and that kind of speaks to what we're doing now. I mean, you describe. I think we made a wall of what your New Year's resolutions are.
Let's see if we can get that on the screen, guys, while Scott's talking.
Stop following the so-called smart money. Stop listening to charlatans. Stop trading the options, retail investors. Stop obsession over the macro. Explain.
So this is on downtownjoshbrown.com, which is my new website. And what I tried to do was think about some of the things that I had done wrong, if not this year, then in prior years. These are evergreen, but I think specifically overtrading applies to this year. This was one of those years where the less you did, probably the better off you ended up because of the nature of this year's rally. First, we had two distinct corrections. One of them was in March with the banking panic, and then the other one was August through October with that mini echo scare in interest rates. If you had ignored both of those two things and didn't feel the need to do a lot of trading around them, you're probably up double digits on the equity side of your portfolio right now. You got a NASDAQ going out plus 50%. You got an S&P going out plus 22%. And those were the two periods of time where we saw a ton of retail trading in the data. I want to touch on the options one, though, because I think this is really my biggest takeaway is that people are doing way too much of this. I'm not opposed to options, so don't write me letters. I'm not going to read them. I'm going to tell you something. 43% of daily options volume right now is being driven from zero-day expiration. 40%. That figure was 11% in 2019. In the last 4 years, we've brought in a new crop of retail traders. God bless them. I love them all. They are doing the wrong things with their money. This is obvious. Zero-day options grew to 17% of daily volume in 2020, then 21% the next year, 36% last year, 43% this year. Most of those trades are not helping anyone other than Ken Griffin. His boats keep getting bigger, guys. He's bought up all of Brickell. How much more money do you want to hand over? The last thing I would say on the option side, the way people lose money is there are three main reasons. First, they overpay for options relative to realized volatility. We know this from the data. It's not my opinion. Don't get upset about it. The second, they incur enormous bid-ask spreads. The typical percentage half spreads that retail traders are incurring, according to Vetify, is about 8%. Pros don't do that. Ask Joey T. He'll tell you. Nobody's making money doing that. The last is losses of 5 to 9% on average, 10 to 14% during high expected volatility announcements. What that means is trading options into earnings. So if you're doing that, understand most of that activity is benefiting someone else other than you. If you want to read the rest, you can hit my site.
Let's kick it around, Joe.
So I love all of these five, and I think one other thing that's so critically important is to have a process. People generally who endeavor into markets just go into the market and they don't have the process, they don't have the plan. And I'll use myself as an example by that. A couple of weeks ago, I think it was on a Friday after, I talked about trimming personally Broadcom. It was a horrible move. Where did that come from? That came from here. That came from the gut. That was my intuition. The process that I utilize is reflected in the quality momentum strategy. It didn't trim Broadcom, and look where Broadcom is today at 1141. So having the process, having a risk management strategy, always asking yourself
Did any
first,
of you guys
where
listen to
am
this?
I wrong?
Sure
How much can I lose? Don't ask yourself how much
I hope
exactly
somebody
is
just
it that
heard
I
what
can.
I mean,
Josh and Joey
let's take
T
number
were saying.
5, for example.
I don't
We
know
can
if
show
Joe
it, again, to remind everybody
cut
the
out on
list.
me because I walked
Stop
away.
obsession over the macro. Now, Jenny, I
but
think it's fair to say this
I don't know
year
why
you
this is
could do
doing
nothing
this with my
other than
earbuds.
obsess over the macro. You had to. I mean,
To her credit, she doesn't.
you're
They
worried-
literally
I'm
just
saying, like,
talked
as sort of
about
generally speaking,
volatility
you
and
had to
why
worry about- you had
y'all
to
are
worry about,
losing
well,
money.
You know, is this recession?
This is what I said this morning
about recession gonna happen?
about AMD
Because
and
of
my
what the Fed's done.
entries.
You had to worry about interest
My
rates. You had to worry
entries
about
have
more
to be
Fed hikes. You
perfect
had to worry
because that
about,
is, it
you know, the
doesn't have
rest
to
of
be
the world. You had to
perfect.
worry
Let me
about China.
rephrase
You had to
that.
worry about,
If I don't get my
wars. You had to
entry
worry about so
within
many
an
different things
area,
that made up the
I'm
macro
not
that
paying up for it.
Inevitably,
I'm not paying up for it. And I get upset, and it's okay. I get upset because I love, it's like, you know, if you don't get upset, it's like, then what do you do? Like, if you're not showing, it's not about like showing emotion and not showing emotion. It's just, I'm getting upset because I was not prepared myself this morning with some of the things that were going on. But letting this go, like I said, this was an area I could have still gotten in, that I would have felt comfortable getting in, but I never got a pullback. If I would have got like a pullback off of like, 140 or so, then I could have grabbed that long, but it just ripped, and I knew it would because of the volume that came in. Now, once it gets past a certain point, I mean, look at this. You're talking 138.55 to 140. 140. 139.96. Call it 140. Again, 138.50 to 140. That is a $1.50 move. Those options are already up damn near 50% on that candle, if not like 35%. That's a huge chunk. If I got $1,000 position on a 35%, that's $350. 380 is 100,000 a year. Right? You see what I'm getting at? And why yesterday I didn't take Amazon? Like, I need you guys to understand the importance of knowing your entry. And as it's getting into your entry, watching the options contract, watching the options level 2, knowing the prices, okay? And as it's pulling into that area, bang, you're getting your long, or, and you're sticking, like, this is where you're getting long, and you're going to take your profits as you get to your targets, right? Like I can't stress that. They talked about it for a reason, because it's a measurement of volatility, and you're measuring your volatility according to your. If you have an account that's $1,000 and you're trading $350, $400 contracts, $200 contracts, like that is a high volatility. You're running yourself at a high volatility clip, and you're going to have to do. You're making it harder on yourself for when you are right versus when you're going to be wrong. Right? Let's say if you have $1,000 account, I would be honest. Like, the only time you would think about trading like some of these names like Tesla and like Nvidia and even AMD. Like AMD, I would kind of let go away because it doesn't have that that volatility where like one wrong move and you're screwed. You know, it's just not going to fall out of bed unless there's crazy news. But like that's about as far as I would go with like $1,000 account. Would be around that area. You would have to wait until like Thursday or Friday to bring your volatility down on your account to trade those options that are priced at a reasonable price. But there needs to be a setup, right? It needs to make sense to trade that. And I think that's where a lot of people continuously over and over fail to make money in the markets, is because they don't understand the measurement of volatility that you're, according to your positions that you're putting on in accordance to your account, and understanding, you know, even just understanding like your delta, the implied volatility, like just those two things can, even just looking at your delta saying, all right, if I go down, if my delta is a 20 on this or a 30, let's say a 30 on $1.40, you know you're going to lose 30 cents for every dollar or make 30 cents for every dollar. 30 cents is in $30 for one contract. Are you okay? So we're at 138 right now. If you have a delta of 50, that's half. So I think people fail to, it's not, you know, I'm going deep in like understanding the options and how much you're going to make and lose in accordance to your Greeks, but I think the more important thing here is understanding the actual volatility in accordance to your, you know, your account and the percentage of risk that you're putting on in accordance to where your stop is. You know, because percentages is where it's at. It's not dollar amount, it's percentages. If you're okay with, you know, it's one thing to say, I'm going to put on, you know, I'm going to buy, I got $1,000 account and I'm going to buy some I'm going to buy these calls and it's going to cost me $1. So you're spending $100. Okay. Well, are you okay with losing $20, $30 at that point on a $1,000 account? That's not too bad. But the question is, how much is this thing going to move, or whatever stock you're doing? How little is it going to move to where you are at that $20, $30 level, and you can't give the stock the room that it needs to be able to do what it does? And then when you find out you're wrong because you've given it a little bit of time, now you're down $50, $60 on that. So now you're already like losing the war, because now you got to make 100% to make that 50 back. Plus, you know, your break even at, you know, like making that $50, right? You've lost 50, so now you got to make 50. Now you want to get green, right? So you could say you lost your $50. Now, in order to make $20, you got to get 70% out of that $100. So I try to say, like, trading names, like, and these names can do really well for you. Like Palantir, believe it or not, CCL, you want a limit order, right? Ford, right? What are some other ones that can help you? There are names out there that you can that people can benefit from. You know, that you can trade, that's not going to kill you. Trading the banks. Bank of America, right? KRE, Bank of America's KRE. And these names are liquid. You don't have to fight for price. You know, you have your level. You see where they are. Like, look at the spreads on Bank of America for, like, even like a weekly. 50, 51, 20, 21. The spreads are tight. 8, 9 cents. Right? The spreads are pretty tight on on KRE. This is the regionals. Those spreads are really tight, guys. So these are just some things that I'm glad that they brought up, because they're so important. They're so important in order for you to long-term consistently bring that equity curve up. Because a lot of people don't understand, and like people don't understand it until they actually understand it and like really get it in their head, like what it is that I'm saying. You know, what it is that I'm saying. And I feel like that's where the struggling part people put on themselves is because, you know, just understanding the math at the end of the day. Understanding the math in accordance with the volatility and the amount of money you have to what you use and what that means for your losses and your winners. So like I said, if you have $1,000 account and you're trading like $100 option, and that delta, you can lose 30 cents for every dollar. You gotta get that entry correct, right? You know, because if you're using 100, that's 30%. That's a 30% loss in your account. Would be, what would that be? That would be like, so if 100 is 10%, you would be losing 3% on that $30 loss on a $100 account, on a $100 option. But you only have 10, like it's where it gets tricky, because then if you try to do it again, you got to get that 30% back. So, and then they'll also still be green. You know, I don't know. If I had, you know, I could maybe make a video about it or something, and really have a camera and doing the math and really fully lay it out. You know, so this is why I don't, it's like I don't FOMO at all whatsoever. I don't ever FOMO, but I will go if I know that I'm seeing something like a pattern, that, you know, I'm going to get a consistent, like if we're going up and it's like a real strong day where I can sense that there's institutional buying on a stock and it's just going to go up all day, I'll know within the first half hour, like the type of day that stock's going to have, because I've been doing this for so long, and there's only so many ways that stocks trade. Stocks only trade so many different ways. But I don't know. It just sucks to see so many people that go in the markets, and they, whether they think it's a scam or not, they know it's not a scam. They know that they're not doing what's right. They say it's a scam, but they know in reality, you know, there's an obviously somebody's winning because of the liquidity that's in the United States markets and the people that are profiting from it. What are they doing? Start doing what they're doing, whether that's selling options. And just because you don't want to take $20, $30, $40, $50 at a time and start getting that equity curve up, you know, that's on you, right? Because you don't think that that's enough money, because you don't have enough margin. Get it started now. That way, 2-3 years down the road, that 50 is 250, 300, right? Then that 350 turns into, you know, 6, 9, right? And as it goes, it will double and triple, right? So, you know, I'm not telling you what to do, but these are just ideas. I feel like people don't do the right thing because whether it's because they don't feel like they're going to make enough, right? Well, if you start now, this is a long-term game. I mean, it's pretty quite simple, and as humans we can make it harder on ourselves. But that's why I just, you know, when I say like this is where I want to be long, and not, if I don't get it, I don't get it, whether it's because I'm not ready like this morning, or if it's just because it just goes without me and something happens, that way I'm not, because then what happens is if something does happen, right, and you just get in just because you think you need to get in, and you see it going and you just want to just get in just to get in. Well, if something happens, now you're going to be on this thing like, damn, why did I do that? And it turned around and you're like trying to figure out where you went wrong. Well, where you went wrong was you didn't need to be in it, or like you couldn't stand what the real issue was is that you should have just let it go, moved on, you missed it, right? It will come again. Those entries will come again. And now you're not battling this cycle of just, it could cause you to like be scared to put on risk is what can happen. If you just stick to your rules, stick to your setups. If you don't know what a setup is or setup looks like, there's all different kinds. There's all different kinds. Just identifying where the buyers are and where the sellers are. That's it. Right? And if something changes, you deviate, you know where your stop is, which is an area where if it starts closing at those levels, you know that you're wrong. What do we have here? Right? This is a 375 is where the sellers are, right? Sell. Jesus Christ, this fucking mouse. But that's all it is, identifying where buyers and sellers are and waiting for it to get to that level. Buyers, sellers, right? It's as simple as that. It's in an uptrend now. We'll see what happens when it gets to 375. That's Microsoft. I don't know. I just wanted to bring that up because I thought what they were talking about was so important that doesn't get spoken about enough, and people don't fully understand that the volatility part of their portfolio. They add too much volatility, and it doesn't allow them to become profitable. And then they start this cycle of just like, it gets frustrating because, the math is going against them. And it comes all right back to why, again, AMD, I didn't just flat out buy and go long this morning when the options, again, are already up 30%. They're already up 30 to 50%. Past that, like, there is a point where I will get long, but after a point it's like I can't, I won't, because I know if I'm paying up 40-50% and this thing starts to pull back. Do you guys know what happens in options? Like when it goes and then it pulls back, and you're buying up here and it pulls back, right? You bought here, it pulls back, and then it goes up here, you're down. Now you're not even break even, you're still down because of the theta and IV, because it's a weekly. So if you get your entry right, you don't have to worry about that. Or let the stock say, all right, if it comes down here and pulls back and I get VWAP, I know a light volume pullback with like an, because of there's a reason why you would get a long. You can't just chase something right out of bed like this, because once it turns around and you start going red, that's when the frustration starts. That's all. I'm not going to keep repeating myself, but I just feel like it's important. It's the main reason why people aren't profitable and don't grow their account, let alone make money. So what I'm going to do right now is I'm going to go through a bunch of charts. I'm going to start cleaning my charts up because my charts are just sloppy. There's just so much going on, and it's irritating me. I'm going to keep my eye on AMD because there's a setup here, right? This trade setup is going to be a failed breakout or a breakout. Like, we're at an inflection point of the stock going higher or lower. That is the type of trade that I'm going to take on this. I'm going long or short on this because of the setup. The setup is either it's going to break out to the long side or it's going to be a failed breakout and I'm going to catch the downside. So I say that because I'm knowing the trade that I'm in. Look at this. Look at this 15-minute bear flag. Look at that. We could get a nice rejection here, guys. We could. It's very possible we could get a nice rejection here. Look at that 15-minute bear flag. And where was our target? 135. Well, would you look at that? So right now I'm watching this level 2. And I'm going to figure out what I'm doing here. I know there's a lot going on my screen. So it's a 15-minute. Is this AMD? It should. I got close there. I almost messed it up. Okay, so it is AMD. I'm wondering if it's going to go to VWAP. I'm really curious what AMD does here. It's breaking up above. I figure because we're below VWAP, it should bounce back to test VWAP, which could be a smaller failed, like a. We'll see what happens. What I'm thinking is maybe it pops up and tries to like test VWAP and then breaks down off of this 479, or this is going to be the start of the breakout. This is a 15-minute bear flag that is a failed breakdown. Right? So it's either 135 or we're going higher. So we're gonna find out. AMD though for sure is at an inflection point. That is for sure. Meta is straight killing it, man. It's just every day new highs.
right, we're back. Aerospace stocks up nearly 20%. In a social media post, hashtag aerospace, Boeing just one delivery away. You're looking for gains in this group. You like GE, maybe Raytheon? What do you think?
Yeah, I mean, well, GE's been a great stock, but it's also a play on aerospace because they're the #1 engine maker, and I don't think it gets a lot of credit. And I think they're going to grow double-digit organic growth and upper teens earnings growth for the next several years, especially as they become more of a simple company. They're spinning out their renewables business in the first quarter of next year, and I think that's going to be a catalyst. You're also seeing analysts change coverage. So you had these conglomerate industrial analysts cover GE over the many years, and now they're changing to the aerospace pure play analyst, which I think is going to get better coverage, better analysis. But on
That looked like a
Boeing,
nice
I mean,
pullback
they
on
are
the
track
SPY,
to
guys,
get
right
to
there.
$3.4 billion
I don't
in
know
free
if you
cash
guys
flow,
seen
and that's
this
what
or
this
not.
stock
Look at the
trades on. That would be
S&Ps.
this year, $3.4 billion. They have a chance of getting to $15 a share
Right here.
in free cash flow by
It's a nice,
2026, and they're definitely
break
executing
and
better.
pullback and
So I still
hold.
like that
So
one.
we may start to
Raytheon
work
is down and out,
the,
and it's very appealing to me.
prior
I'm
highs.
not there yet, Scott, but down 20% on this engine
Just
issue.
look at your
trading
volume and
17
stuff.
times. It's
Make
certainly
sure
on
the
my watch
volume
list.
All
is
right,
matching.
quick, break. Final trades on the other side of that.
Dave.
All right, 3 o'clock Eastern, closing bell. We've got a big lineup today. Eric Johnston is on with us. Marcy McGrath, former Morgan Stanley Vice Chair Gary Kaminsky joining us here too. Ringing the closing bell today. Celebrating the Joe T. 3-year anniversary. You'll be up on the podium. Fam's coming. Excited for you. Congrats.
Yep, it's going to be really moment to celebrate a milestone, and I couldn't support of all of you, so thank you for that.
All right, we're proud of you. Why don't you start us off with finals then?
One of the better performing consumer discretionary names in the quality momentum strategy in the Joe T ETF, Mercado Libre, ticker symbol MELI.
All right, Jenny Harrington.
Okay. I like buying stocks that are down. So Aptiv from our growth portfolio is down 11% quarter to date, trading at 15 times earnings, 25% earnings growth next year and the year after.
Did you forget which stock you were doing for a minute?
Aptiv?
No. All right.
No,
Stephanie
no.
Lake.
I just am so used to saying dividend yield, and then I'm like, there's no dividend yield.
Final trades. It's not a book report. Who's next?
Steph.
Fortinet, it's up 16% year to date, but down 28% from its highs after they missed 2 quarters in a row. I think 2024 setup is really strong.
All right. JB.
Toast, getting toasty.
Wow.
Oh, stock's up near 6%.
Yeah,
All
how
right.
about that? What's up?
All right. Dow, high of the day, trading at an all-time high, and we are up across the board. I will see you on closing bell. The exchange begins right now.
Thank you very much, Scott, and welcome to The Exchange. I'm Kelly Evans. Here's what's ahead this hour. The toothpaste is out of the tube and a recession is coming. Don't scream at the TV. Those are the words of our economist who says 2 things are happening at the same time and there's no escaping it. She's here to make her case momentarily. Plus, it was our market guest's table-pounding fat pitch buy, and then came last week's Fed meeting. He tells us the trade, what's changed, and what he is bullish on from here. And shares of Coinbase have already tripled this year, and an upgrade today says another 30% to go. But the industry very much still in limbo, and some argue a Bitcoin ETF will hurt their prospects. We'll talk about all of it with Coinbase CEO Brian Armstrong. We begin with today's markets. Dom Chu with the numbers and some superlatives to mention, Dom.
Superlatives because we've got a record high in certain parts of the market. Mega cap technology for one with the NASDAQ 100. But among the 3 major indices, Kelly, we get to put some stars up here today, or at least 1 star. For the Dow Industrials, right now near session highs up 0.5%, 37,492, because we've hit a record intraday high for the Dow Industrials in today's trade so far, so a big move there. The S&P 500 is up about 0.5%, 4760. We're now just roughly 1.5% below record highs, but we have hit a high for the year, so we'll put a little check mark next to them. And the NASDAQ Composite 14,968, up 0.5%. Again, the mega cap NASDAQ 100 has hit a record high, but the NASDAQ Composite a high for the year. So all time and then highs for the year for the other 2 major indices. The Dow Industrial is really leading the way higher so far today. Watch that. This is the season for retail, and a lot of these consumer-focused retail names have had a rough year in 2023, but have been trying to stage a near to medium-term comeback off the lows that we saw this fall. Among those top performers in the S&P 500 today, Estee Lauder up 4.5%. VF Corporation trying to bounce back from the cyber incident news from yesterday, up 3.5%. Etsy, eBay, PayPal Holdings, financial technology-oriented companies that are all moving to the upside there. So keep an eye on those consumer-focused stocks. And speaking of fintech, the stock move of the day, buy now, pay later in Affirm, up 15.5%, $50.40 right there, surging to a high for the year. Why? Because it's expanding its partnership with Walmart to offer its buy now, pay later services at self-service kiosks at Walmart in the coming weeks and months. So watch Affirm shares, big tie-up with a big retailer. That's what's driving the action there. Kel, I'll send things back over to you.
That's funny in light of the big journal profile about that just this week. Dom, for now, thank you very much, our Dominic Chu. Let's talk big picture now as we're trying to get a clearer read on the consumer as we move through the holiday shopping season. Steve Leisman has the results of the latest CNBC All-America survey. Also with us today is Francis Donald, Global Chief Economist and Strategist at Manulife Investment Management. Welcome to both of you. It's nice and cozy here all together. Steve, what are we learning?
Click, click, gift. That's what I'm saying today. After a 2-year slump below the pandemic high, online shopping made a comeback this holiday season. Take a look at the numbers. CNBC All-America survey finding 57% of Americans naming online shopping as their top 1 or 2 destinations for Christmas gifts, up from 51% last year. Big box stores down 3 points to 18%. Non-chain store sales unchanged at 16%. 18% when we started. Look at this, Kelly.
Wow.
I think you had fewer kids. Maybe I had more hair when we first started asking this question. It was 18% back in 2006, and now look at that community. You see that little dip there? They hit the pandemic high, 50, down for 2 years, and now back above for a new high that we had. Those spending more include women age 50 plus, income lower than 30,000, no investments in the stock market, income 30 to 50,000, and those spending under $200. All that suggests to me that people may have glommed on online shopping, looking for bargains, keeping costs down amid inflation here. While Americans differ over how much they spend online, they don't much argue about where they spend, and you know the answer to this one. Amazon, unchanged this year, 74%. Walmart did get up 4 points, but I don't know if you even call it a competitor. It's 16 points. Interesting to see the specialty goods stores like Etsy, and by the way, local websites also in that group there, up by 6 points. 31% say they're going to use debt, which is kind of unchanged and really not a big deal in terms of the use of debt there. But that buy now, pay later, which is what Dominic was just talking about, 10% of all shoppers. We have not asked that question before, so we don't know how that compares comparatively, but not bad.
Sign of the
entry
times.
for the first year. Courtney tells me she's been talking about this for 3 years, and everybody's paying attention.
Well, I think after the Cyber Monday and Black Friday numbers, when that was the clear bright spot, and the question is whether this is just people kind of borrowing from the future in a bad trend, or just a different, innovative way of using credit. So a lot
At
of
a time
mixed feelings.
when interest rates were super high. It's interesting to me. I don't know that I personally anymore think of online as a place to go for a bargain.
Yeah.
It's
Amazon's not that cheap.
Amazon's
for sure.
not, well, not but it's just like you do that to sort of see, well, is there a cheaper way to do it or a better way to do it? But it's also just a way to shop, convenience. It's not a directed way to shop.
Real quickly then, before we bring Francis into this, then would you say the takeaway from the All America survey is that consumers are feeling stretched, or that they're feeling more flush this holiday
More
season?
flush. Here, the takeaway for me has been lousy views on the economy, but hearty spending plans.
Francis, what about you? I know you're a little bit more cautious, worried about a combo of things, the consumer being one of them.
Nice. What's up, buddy?
There's still time left.
I was just having a
economists
bite
get
to eat.
pigeonholed
I
into
just
this
seen your
economist
message.
Or this
That's
recession
what's up,
or
bro.
no recession view.
Give me 1 minute. Let
When
me.
you have a recession base case, things can
Not
change.
chew in front of the
But
mic and
more
stuff. Give me
important
1
is
second.
When do you start trading that? We've just
What's
had
the new
a
indicator
political
about?
Pivot from the Fed. We have other central bankers trying to push back against that, but indicating no more rate hikes on the horizon. Inflation is slowing. The data is still strong. So we're in tactical Goldilocks, and two things can be true at the same time. You can be concerned about the recession ahead and know it's not yet time to trade it.
So remind me how long you've had this view that it was coming. So for instance, 2023 then was what kind of year?
Too long, Kelly. We've had this view for too long.
That's awesome.
And
No,
I
I was
think
actually,
the big mistake that a lot of economists made in the 2023 recession call was not in
I was
saying,
learning,
oh, this time's exactly the
just trying to
same.
learn
It
when
was
I
actually
took
thinking that the
a
lags
couple
of the
weeks off. That I
economy
was
would be
looking,
shorter. The average time that it takes
learning
for these
Python and
rate
stuff
hikes
too to
work
try
their way
and
through is about
have
2
some of that,
years. The make
you know,
or break
kind
for
of
this economy.
like
So
fool around
really
with some of that
throw out
stuff
that
too.
recession call. I need the next 3 to 6 months to
That's
not
awesome.
have a rise in the unemployment, to not see a
That's
consumer
awesome. That's
materially
cool,
pull
man.
back, to not see capex decline.
You
Now, expecting that to
using
happen
GPT
earlier,
or anything,
that was a
or?
mistake. Not recognizing how
But that's sweet,
pro-cyclical
man. Hopefully it
fiscal
works
will
out, bro.
be. That's what landed a lot of economists in the 2023 recession camp. And if we're talking 6 months from now and we've not seen this develop, then yes, this time is remarkably different.
Get a
Kelly,
data set
and we'll
over
have to change our tune,
X
but
amount,
we have not yet seen
and
that relationship between
that'll help
rates
you
and
really
the
look
economy
back,
just yet.
right? It'll help you look back and
Well, I do
see
sort
like,
of land in the camp
you know,
of
what
this time is very
when longs or shorts
just
had
think
in
that
common.
So much of the
know, that's-
inflation improvement we've had
I think-
has been the result of supply.
I mean,
side
they're important. They're so
and
important to
not
have
much
stuff
in
like
terms
that
of
and to
the
back
Fed
test
interest rates biting.
different,
And I think that
you know, different setups and stuff like
analog-
that,
the
and different
reason the
types of
analogs
trades.
Don't work is because you're going to be hard pressed to find a time when you had 0 and then 5.5. So much of the economy went in on that 0 bit. So you have mortgage rates down below 3. You've got, still car loans are playing out over that period of
Oh,
time.
I even think about all of Wall Street, financialization,
That was the next thing I was
private
gonna say.
equity. I mean,
the
entire
corporates,
industries.
the private
yeah.
equity. So I don't think you want to rule out recession, but I do think we're in a bit of an interesting foot race here. And the foot race is as follows. And I don't know that Francis would disagree with this, that it's a foot race between the Fed and the market lowering rates and the refinance cliff.
Yes.
Right? So do the people right now who are sitting there with 2 and 3 and 4% coupons or debt have to refinance into 7, 8, 9, and 10, or 5, 6, and 7. And I think those outcomes are very different as to whether
Let's
or not we
see.
see extended bankruptcy.
Let's see if this
extended layoffs,
bounces,
and that
or
kind
if it's a
and
failed breakout.
retrenchment of business spending.
Business spending, obviously.
Yeah.
That'll be
homeowners don't have to, you know, they're
two
just sitting
failed
pretty on,
breakouts.
you know, 2.5% or 3% mortgages if they have them, which is
This is what I was talking about. This being a failed. This being a like. You know, this bear flag here tries to break out in reverse, but it doesn't. But the bigger picture is the same thing as this right here. You have a daily. You have a daily bull flag on the daily chart, and I think we just had a failed breakout. All right, we just had a failed breakout. We're in the area where it broke out, it pulled back to test, and if it can't hold this area and bring some buyers in here to go higher, we're going to have a breakdown. So I think that this plan of pulling back, the plan that we went over, is going to work out. A couple different ways again that you can trade it, right? You could get short, take profits at 138, and then look for 138. Oh, I'm sorry. I gotta back out. That's failed breakout. I think we pull back to like 136, bounce back to like 138, and then 138, enter a short, and look for this thing to be back down to 130, 131. 135 will be oh my gosh, this mouse. 135, 134, yeah. So 135 will be the support level. It might be. This thing doesn't have much to like hold it up. It's kind of just went. So I'm curious what AMD does. Dude, it's been so... Look how long this rally has been. I had a feeling it was coming. This long freaking bull flag here. It just kept getting bigger and bigger. And I was saying that the breakout should be pretty big if it goes to break out. And it was. That's $100. $95 to $140. And it did it in a month and a half. A month and a half it did it. About a little less, a little more, but 130. Yeah, a nice test of 130 would be nice, which would be that previous high back here at 130. So let's see what she's gonna do. Looks like to be a failed breakout. I don't know. I'm gonna keep my eyes on it. It's still, yeah, it's not holding 140, 139.
Look like?
I can't by now.
We've only had 4 of these in my lifetime. Macro matters most at inflection points. This is a massive inflection point for investors, whether it's March or June, July, or even September. Sure, it'll matter for tactical portfolios, but bond rates are going downwards. And for most investors, all that cash on the sidelines, those cash MFFs, those are not going to be interesting in this next phase of the cycle that
I think that's an interesting development because cash is suddenly trash. It was such a great thing before, right? I was getting those 5% in the money markets. That's going to come down. My 1 years, we were on this show and we said 1 year, the great thing about 1 year is it's only 1 year. The terrible thing about 1 year, it's only 1 year. So you've got to make another decision coming up. The other thing that's interesting to me is all the folks who said that we were going to, I don't know what the word is, have an apocalypse in terms of the ability of the government to fund itself. All of a sudden, we're funding it below 5%.
Well, the more bond yields fall, the less we'll hear about that as well.
Exactly.
Although still at these levels, it would be a challenge. For now, we'll leave it there. Thank you both very, very much. Francis Donald and Steve Leisman both joining me here today.
Pleasure.
My next guest is changing his market outlook after the huge rally in stocks following the Fed pivot last week. He says small and mid-cap value are no longer the table-pounding fat pitch buy they were in October. Joining me now is Charlie Babrinskoy, Vice Chair and Head of the Investment Group at Ariel. And correct me if I'm wrong, Charlie. I don't even know what to say.
Well, what you should say is what important economists have always said, which is when the facts change, you need to change your outlook. And that is what has happened. We have gone from, I want to be careful here, table pounding fat pitch buy, which is what small cap value stocks were, to approximately fairly valued right now. And that's not the end of the world. That doesn't mean bubble. That doesn't mean overpriced. That doesn't mean sell all your stocks. It means that our expectation is that returns from here will be normal, which for small cap value is kind of 10%, not bad, but that we are no longer ridiculously cheap. And we were ridiculously cheap in October.
So what does that, walk us through tactically what you're doing now as a result?
So first of all, we don't think it's smart to trade tactically and to come in and out of markets. When people do that, they tend to come in at the wrong time. They tend to buy when everyone's happy and bullish, and then they tend to sell when markets are down. So that's the wrong thing to do. But what you should do is look at valuation. And when we look at our calculation of the intrinsic value of our portfolio, that was a 36% discount in October of this year. 36%. Our stocks were trading for 36% less than what we thought they were worth. Today, that's about 23%. It's not terrible, but it's about average historically. So, you know, the endowment effect says that we probably like our stocks that we own, maybe even more than we should. So let's say that that's about an average discount to intrinsic value. That means now is not the time to do anything dramatic, but it's not the table pounding buy time that it was 4 months ago.
Yeah, I'm trying to think of what, so it almost sounds like what you're saying as a result, Charlie, is that you're just kind of sitting tight. We're showing some of the companies you've liked historically, Mohawk, Goldman, Bank of Oklahoma. So are you sitting tight here then and just kind of waiting this out? You're not, going long the Mag 7 or something like that.
No, that would be really bad. No, that I do not think you should do. That is the one, I'm glad you brought that up. The one area that is still overpriced, maybe even bubble priced, would be large cap tech. We are worried about the Magnificent Seven, who have underperformed this last month. Just 1 month doesn't make a long-term trend, but those stocks are seriously overpriced, and they, as you know, have a huge impact on the S&P 500. So we would say, I would personally be modestly bearish on the S&P 500 and call me fairly priced for small cap and mid cap value.
Which kind of goes back to the questions about the Russell 2000 versus the S&P and a few things like that. Again, I know you're not a big fan of kind of investing more in the indexes broadly, but you do think that headwinds for the Magnificent Seven will keep the S&P from shining more brightly from here on out?
That's exactly right. People have been hiding in the Magnificent Seven. If you thought a recession was coming, you avoided cyclical stocks, you avoided cyclical sectors, you avoided banks, you avoided oil, you avoided consumer discretionary, and you bought things that you thought would do fine no matter what the economic outlook. Amazon, Microsoft, Apple, those names tend to do fine in any economic economy, and so people have been hiding in the Magnificent Seven. And I think that trade is going to unwind as people realize we are probably not going to have the recession that the bond market has been telling us was a certainty for the last 18 months.
Just to go back, so the Russell 2000 value is up 21% since October. So finally, there's been this kind of amazing catch-up trade in a sector that's one of the worst performing for, you tell me, the last decade. Was that it? Was that 6-week move? Have you already missed it? Is it time to now put that, back on the shelf for another 5 or 10 years?
No, because since 1926, small cap stocks have outperformed the broad market and value stocks have outperformed the broader market. And so small cap value has been for almost 100 years a wonderful place to be. And again, our expectations for this sector are still fine. Call it 10%. It's just not ridiculously cheap the way it was in October. We have good names that are, the benchmark is probably trading around 14 times right now. It was around 12, 11 in October. That was silly in this kind of environment. So I want to be careful. Don't go out and sell all your stocks today because we're now at fairly valued. We're just no longer at stupid cheap the way we were in October.
No longer at stupid cheap. Charlie, thank you, as always, for joining us. Always good to check in with you. We appreciate it.
Thanks, Joe.
Charlie Babrinskoy with Ariel. Coming up, the home builders are riding a 7-week win streak now. It's their longest in over 2 years. In that 7 weeks, they have shot up 41%. Now with housing starts at their highest level since May, is that good news fully priced in or not? We'll dive into that next. Plus, we'll speak with Coinbase CEO Brian Armstrong about the crypto rally and the regulatory concerns into next year and what impact a Bitcoin ETF will really have on their business. That's all ahead. As we go to break, here's a glance at the markets. Sitting near session highs, Dow's up 0.5 point, 182, 0.5%, I should say, 183 points. On its way now towards the midpoint between 37 and 38,000. The S&P up 0.33%, similar for the Nasdaq. We're back after this.
This is The Exchange on CNBC.
Back.
Welcome back to The Exchange. U.S. housing starts surged more than expected last month as mortgage rates fell back from their highs. Construction of new homes rose by nearly 15% to an annualized pace just over 1.5 million. That's the highest level since May. And that in turn is boosting the builder stocks today, including Meritage, Toll, and D.R. Horton. And those three names are among my next guest's top picks for 2024. He says they'll be able to weather a strong spring selling season. For more, let's bring in Joe Allersmeyer. He's a research analyst at Deutsche Bank. Joe, welcome. It's good to see you again. And first of all, do you mean a strong kind of traditional spring selling season could in a way be a headwind for the home builders?
Thanks for having me, Kelly. Nice to be here. What I'm really talking about is if you look at this starts number today, look, I would be really excited to be talking about this type of number in April or May, but this is a seasonally unimportant time of year really for builders. We're in November really talking about a number that is lower on a monthly basis than what we actually were building to in May, June, and July. And if we build to the same number next month, we're actually going to see a 9% sequential increase. That's how funky this data actually gets. So I'd caution people to kind of look at this as not necessarily indicative of a really big acceleration in starts simply because rates are coming down. I would think of it more as builders are putting inventory in the ground, preparing for a more normal spring selling season, and that's going to drive really strong cash flow in the year ahead.
All right, so that to you says that even the all-time highs we've seen for these stocks, and you've been bullish. I mean, I remember well our previous conversations where you've said, they will continue to perform, and that sounds like today's data point just underscores that.
Totally agree. I mean, look, I've answered this question now, I think 3 times on the program. What do we do with the stocks at the all-time highs here? The stocks are at all-time highs. The book values, though, are also at all-time highs. So if you look at the valuations, yes, they're closer today than they were earlier in the year, but valuation on book is actually still pretty attractive relative to some of the stronger returns on inventory and returns on equity we've ever seen in the builders. We put out this outlook report 2 weeks ago. We've had a lot of discussions with people about how to conceptualize valuation at a time when cash flows are much, much stronger. Balance sheets are in much better shape than they've ever been. And so should we really be valuing these things on the historical cost of inventory, or should we start to look at them more on the basis of future cash flows, like any investor does with any company? We think that that's the right way to think about it, and we're looking forward to having more of those conversations as builders decide to continue to drive good free cash flow by not necessarily reinvesting in land, but returning cash to shareholders through buybacks.
What's the biggest pushback you're getting on your bullishness?
I think the biggest pushback, it's the typical, I would almost call it a lazy thesis of, look, this is how it's happened in the past. The stocks get expensive. People start talking about re-rating. The builders do something stupid. They get undisciplined. They buy something. It really does actually depend on what the builders do from here, and not necessarily what investors decide how investors decide to think about it. The builders, it's actually totally the ball's in their court. If they decide to say, we'll be more disciplined, not necessarily chase bad land deals just to continue to pursue growth, but actually shrink the business potentially on purpose to drive higher value per share and higher free cash flow per share, that would really force investors' hands around valuation.
And that's interesting because our last home builders guest a couple of days back said he thought the land piece of this was really important. He mentioned that they're using, for instance, options. It's a little bit more of a asset-light strategy, but it sounds like discipline in that area is one of the top concerns for investors. And in some ways, this whole discussion reminds me a lot of talking about the oil companies and the ways that they traditionally invest and spend over their cycles.
Absolutely. I really like that you drew that comparison. I mean, looking at options, it's great because you can put down 10% of the whole value of a deal instead of having to put down 100%. That's certainly a more capital light way to do it, but it doesn't necessarily mean that you're doing better deals. You could put down 10% on a terrible deal for that matter, or you could do 20 times as many deals at 10% and be putting more capital down. What I really think is important about what you just said, though, is in the oil and gas industry, and not that I'm an oil and gas expert here, but capacity was not the best incremental use of capital when it came time to looking at dividends and increasing leverage and doing dividends and buybacks. I think it's the same thing here. Home builders should really look at the constraints that they themselves are talking about on the labor and materials and land side and say, is it really the best use of capital to go and pursue what is likely to be higher and higher cost deals when our stocks are something that's relatively attractive in our view.
Or again, almost reminds me of the insurance industry where you can kind of give up pricing to chase, or keep market share and how Buffett was always like, no, don't. My quick, Joe, final question or observation is, when the Fed pivots, builders traditionally outperform. And that's exactly what's happened over the past 6 weeks. They are up, 41% in 7 weeks. Do you worry if we kind of ignore all the great fundamentals you outlined, just talk about the technicals of it, that this move is simply operating off of the Fed pivot and nearly out of gas?
Yeah, and this has been a crazy year. If you look at the charts just from a year-to-date perspective, they went up and then they went down and then went up again. So the 40% or so I think I heard you quote on the lead-in, that's off of a trough that came off of a peak earlier in the year, and rates kind of went up and they went down. So I don't know that I'm really looking at the relative strength of the stocks or anything like that. But if you look at the price to tangible book value multiples, we will acknowledge that they are towards the upper bound of a typical valuation range for the stocks, and that would mean sort of into next year they do face a little bit of a valuation headwind. So I wouldn't expect the stocks are up 100% next year because coming into this year the price to tangible book values were indeed very, very inexpensive. We don't have that condition going into 24.
Joe, appreciate your time. Good to check in with you. Thanks so much.
Thanks a lot, Kelly.
Joe Allersmeyer from Deutsche Bank. Coming up, shipping giants are beginning to reroute their vessels around southern Africa to avoid the Red Sea. Shipping stocks have actually benefited somewhat from the disruption because they're raising fares and adding to demand for ships. After the break, we'll tell you what Maersk's CEO had to say about freight prices and shipping delays. The Exchange is back after this.
Orient.
Welcome back to The Exchange. Shipping giant Maersk is redirecting some of its vessels, now sailing around the southern point of Africa to avoid the Red Sea conflict area. The new route could add up to 4 weeks to a ship's journey, and that's already being reflected in shipping rates. Here's what Maersk CEO Vincent Clerc told Money Movers this morning.
What we have seen already in the last 48 hours is sharp increases on some of the spot freight rates because of fear in the market that tonnage will be short in the coming weeks, and therefore that there will be a shortage of capacity as a result of these longer trade routes. We do actually believe that the international community will mobilize fast to reopen these trade routes to guarantee safe passage, and that should be something that resorbs itself in the weeks to come. So not something that should be with us for a long time, but it's something that we need to see actually happen.
Around 12% of global trade passes through the Red Sea, including 30% of container traffic. And Goldman echoes Maersk's concerns about freight prices, saying they could see a bigger impact than even commodity prices. The firm estimating a 1% increase in oil tanker demand leads to a 5% increase in freight rates, and the effect will be bigger on end customers the longer this conflict plays out. Let's get to Tyler Matheson now for a CNBC News update. Tyler?
Kelly, thank you very much. Excuse me. President Biden gave a eulogy today at the funeral for Sandra Day O'Connor, former justice on the Supreme Court. Mr. Biden, who was the ranking member on the Senate Judiciary Committee during her confirmation hearings, called the first woman to serve on the Supreme Court a pioneer who broke down barriers in the political world and the nation's conscience. Former Justice O'Connor died earlier this month at 93. The Jeff Bezos-owned Blue Origin, with a successful launch this morning of its first mission in more than a year. The new Shepard rocket, which was uncrewed, had dozens of experiments on board, reached an altitude of about 350,000 feet, returned to Earth 7.5 minutes later. There you see it taking off. Successful project there. And Ricardo the Bull, who gained national attention last week when he wandered onto the train tracks in Newark, New Jersey. There's a lot of bull in New Jersey. Getting a little help from his friends. New Jersey Transit announced today that it's selling a stuffed animal in honor of this bull. A portion of the proceeds will go to Ricardo's care at an animal sanctuary. Kelly, New Jersey. You gotta love it. We're going to hear from the governor. We're going to hear from the governor in the next hour. Phil Murphy is going to be on Power Lunch. We're going to ask him about this bull.
If they can move that quickly on stuffed animals, they can move that quickly on a few other matters, I think.
You bet. See you then, Cal.
See you, Tyler. Thanks. Coming up, Coinbase shares hitting a new 52-week high today, now up 350% this year, although they're still 60% below their record highs. Up next, we'll speak with Coinbase CEO Brian Armstrong about the ongoing efforts to regulate crypto and what a potential Bitcoin ETF would mean for the company. We're back after this.
NBC.
Welcome back to the exchange, and check out some of these crypto stats. Bitcoin is about to close out its best year since 2020. It's up more than 150%. It's giving a boost to companies like Marathon Digital, up more than 500%, and Riot Platforms nearly quintupling. MicroStrategy and Coinbase shares are quadrupled too this year, but will the Bitcoin-fueled boom continue into next year? Let's ask Coinbase CEO Brian Armstrong, who joins us now with our Kate Rooney. Welcome to both of you. Kate?
Hi, Kelly. Thanks so much, Brian. Thank you for making time today. I want to start with some of the news this week. You're donating $1 million as part of this massive crypto super PAC in Washington, $78 million total for congressional races coming up next year. What kind of influence are you hoping to garner here?
Yeah, this has been a big moment for the crypto industry. So I personally donated, but so did a large number of other companies in the space, actually. So raising $78 million for a super PAC is a big milestone. The goal of that PAC is to elect pro-crypto and pro-innovation candidates in 2024. And there's 52 million Americans out there who have used crypto now. That's 5 times the number that have a union card. It's 3 times the number that have used an electric vehicle. And so this is a massive constituency, and they don't feel like their voices are being heard in DC. So I think it's time to make sure that people know that being anti-crypto is just bad politics in DC.
So speaking of DC, Congress is one thing, Brian. Would support in that branch of the government be enough to leapfrog what's happening on the agency level? Take the SEC, for example, lawsuits and what frankly really feels like animosity lately between that agency, at least, and Coinbase. Would congressional support be enough to offset that?
Congress could certainly help here. You're correct that we have not seen a very cooperative SEC. There's been a request for clear rules. Coinbase filed a formal petition to see some clear rules in the crypto industry on the areas of the law where it's not clear. And unfortunately, the SEC has been unwilling to do that. So we've asked a judge to compel them to respond to that. I think in the absence of the SEC acting, what we can see happen is Congress can go pass new legislation. And this is what we've seen 83% of the rest of the G20 countries go and do already. So the U.S. is actually kind of a little bit behind here. So Congress could act, the CFTC could step in, or the voters in 2024 could really send a clear message.
And the SEC is going to have last word when it comes to Bitcoin ETF approval. That does seem to be kind of priced in at this point. Kelly mentioned Bitcoin prices this year. Some have argued when it comes to Coinbase and sort of the impact, you can't trade ETFs on Coinbase. It could be a net negative, for example, if it ended up driving flows to places like Robinhood. How should investors think about the impact of an ETF on Coinbase?
Yeah, so I don't agree with that. I think the positive impact will be there for Coinbase and the industry writ large. One reason is that ETFs are going to bring in some new pools of capital into crypto from areas of the economy where people aren't able to directly trade crypto. The other important point to note is that Coinbase has been named as the custodian in, I think, all but one of those ETFs that have been filed. And so we're hoping to play a piece of that value chain as well.
Brian, it's Kelly here. If I could just pick up on that, and we've spoken with Mizuho's Dan Dolev a number of times on the program, who says, yeah, it'll be a headwind for Coinbase. He thinks people will move from the ETF, maybe move off your platform. And when I said, well, what if they don't? He said, well, to your point about the custodianship and all that, maybe it's a lower margin business. Can you talk about that? How profitable is kind of current, call it retail trading to Coinbase? And if you lose some of that, does what remain, is that less profitable?
Yeah, so whenever there's a new technology that comes on the scene or new product, you always kind of have to ask yourself, what % is this a substitute for the thing that came before, and what % is it a complement? And of course, it's usually never 100% one or the other. I think in this case, it's mostly a complement. You could say it's 80-20 one way or the other or something like that. But our goal with crypto is to get it plugged into all areas of the economy. We want the massive pools of capital out there that are in endowments and institutions, pension funds, they should all be able to participate in this new asset class. And so I think mostly it will be a complement. We'll see large new pools of capital come into crypto. I think that's part of why we've seen Bitcoin prices be up 90% year to date in anticipation of this. And there's also going to be a huge retail and institutional segment. They don't just want to own an ETF for Bitcoin. They want to actually own other crypto assets, or they want to earn staking rewards on their assets, or they want to actually participate in the crypto economy with stable coins and commerce and NFTs and Web3. And so those people are going to come to Coinbase and use our product directly as well. So Coinbase has a role to play in all aspects of the value chain here.
And Brian, finally, I want to ask you about higher interest rates and actually lower interest rates heading into next year. You've had to adjust as rates have risen and kind of taken a bite out of some of the trading activity. You've really pivoted, and now about a third of revenue, at least in Q3, was coming from interest income, excuse me, on stablecoin reserves. How are you going to adjust as we see interest rates potentially coming on the other side and falling next year? What's your strategy for adjusting the business in light of the macro environment?
Yeah, well, a few years ago, our business at Coinbase was 95% trading fees, and we made a big effort around the time we went public to start diversifying our revenue. And so we did manage to get more revenue streams in subscription and services, and the interest income from USD coin and stable coins was a big factor in the last few years. So what's great is that now we have multiple sources of revenue. Some of them in a high interest rate environment go up. some of them in a low interest rate environment go up. So what that means is our revenue has started to become more predictable. That's helped us as a public company with our revenue multiples. It's been a really great story to tell Wall Street.
All right. We'll leave it there, and we appreciate, Brian, you joining us for this today discussion. Brian Armstrong, the CEO of Coinbase. Kate, thanks for bringing that to us as well. Our Kate Rooney out west. Coming up, the rally in travel stocks continues with Booking Holdings hitting a record high, Expedia at its highest level since May of last year, Marriott and Hilton touching record highs today, and Marriott shares pairing those gains, by the way. But the airlines, they get the attention during the holidays. Can last year's flight nightmares be avoided this year? We'll ask next with the Dow up 200. Don't go anywhere.
you